Faces possible extradition. Inflation focus as the Fed begins its two-day meeting. Investors await US CPI data that may shape the outlook for rate hikes into next year. Asia stocks are mixed. Plus, cutting headcount. Goldman Sachs is said to be planning hundreds of additional job losses as it restructures its struggling consumer business.
Tom, let's look at the futures for the moment. We're seeing a couple of gains across the board. The FTSE 100 gaining some 0.1%, much like the DAX futures. All about that CPI number in the US later.
Yes, 7.3% is the estimate, down from 7.7% in last month. And interesting to hear from JP Morgan suggesting if you get 6.9% or below, you could be seeing a 10% rally for the S&P. You saw a rally of more than 5% in the previous month when the CPI data came in softer than expected. Crucial, as we said in the headlines, in terms of the steer for rates into 2023. The market's betting that you're going to get a cut. Economists not so sure what the CPI do to those estimates. The FTSE 100 currently gaining 0.2%. We had data out in the labour market here in the UK pointing to continued tightness there, despite the recessionary environment that we are edging into. The German DAX gained 0.3%, with inflation data holding up above 11% for that economy. Over in France, the CAC going up by 20.3%, and the Spanish IBEX currently flat, but we're waiting for that to open just in the next few seconds. Of course, the Fed meeting also, and the lead up to that when it comes to the decision, and importantly, of course, the press conference from Jay Powell. Let's switch it over and see how things are playing out across assets. And the context for the S&P is you've seen losses year to date of around 16%. That compares for about 10% year to date on the European benchmark, and in fact, a gain of about 1% year to date for the FTSE 100. Currently, the futures pointing up just by 0.1%. Positioning, of course, tricky ahead of that CPI print. A lot of question marks as to where it's going to come in. Again, the forecast 7.3%. Euro dollar at 105. That's a gain of 0.2%. Yields are off on the 10-year just by 2 basis points. 3.59 on the benchmark. $79 a barrel on Brent. That is a gain of 1.5%, tying in to optimism there's going to be more demand coming through from China. Francine.
If we dig a little deeper into the sectors, Tom, this is what we're looking across the board. There are 19 groups that make up the stock 600. Technology, energy, and chemicals are on the way up. Technology actually the leader, almost 1% higher. In terms of the sectors and industry groups that are feeling the pressure in today's trading session, I have utilities down 0.1%, healthcare, food and beverage also down by similar amounts. Now let's also bring in Bloomberg's market reporter, Valerie Teitel, who's looking ahead to the US CPI later today. And Valerie, after this, everything could change on the markets.
Yeah, that's true. We've seen some wild swings after CPI prints recently, but a lot of the attention today will be on the core metric, which is forecasted to come in at 6.1% year on year. And within that core metric, it's really going to be the core services component. In my chart here, that is those lines in white. That's really shown that inflation has gone from goods into services and come entrenched into things like rent and wages. Powell specifically mentioned this component at his Brookings Institute speech a few weeks ago. And if we see any softening here, it could really lead to quite a buoyant equity market and could really cause some changes to what we expect from the Fed tomorrow, and specifically the dot plot, which is going to be where the Fed is guiding the terminal rate for 2023. If we see any softness in this core services metric, they could perhaps guide the terminal rate lower than some expect. The current expectation for the terminal rate is hovering around 5%. But look, the S&P prints, we have had some wild swings. The last 6 prints saw the S&P jump around 3%. In today's metric, it really could see a wild swing if this core services metric comes in soft.
Yeah, the importance of focusing on the services component of this CPI data print. Markets reporter Valerie Teitel, thank you for breaking that down for us. Let's bring in now, and remain on this story, of course, it is essential for these markets, but let's bring in Altaf Kassam, head of EMEA Investment Strategy at State Street Global Advisors. Altaf, good morning. Thanks for coming into the studio. I was referencing the call there from JP Morgan that if you get 6.9% or below on CPI, you could see a 10% rally for the S&P. Does that align with your thinking on how the positioning is leading into the CPI print, the potential upside if we get another softer than expected print?
I wouldn't be so bullish on the upside on a softer print. I'm afraid I would be a bit more bearish on the downside if we get a stronger than expected number. So I don't think the market is quite positioned, that strongly for the upside. But at the same time, we do expect the numbers to keep trending downwards. We do think this disinflationary impulse will continue. So we're hopeful that CPI will show the continued downward trend, but we don't think the market reaction would be that powerful.
Is there anything in the number today that would make you cut your equity allocation?
I think, obviously, a higher number, especially if we see higher core CPI, if we look like some of those sticky components were staying sticky, that would be a worry for us. But overall, we do expect that disinflationary impulse to continue, definitely.
What is the confidence around that disinflation call? Because that doesn't align with some of the other strategists that we get on here who are much more cautious about the stickiness of the inflation into 2023. But you see a clear disinflationary trend.
Yeah, I would say definitely in the US, where there's less reliance on Russian energy, there's less reliance on grain and fertilizer imports from the Ukraine as well. We're pretty confident that the supply side issues that have been plaguing the inflation basket are resolved, and they're going to keep pushing downwards. And some of the more stickier elements are also kind of coming off. So we're more confident in the US. In the Eurozone, it's a bit more problematic given the reliance on Russian energy and grain from Europe as well. And in the UK, it's more worrisome again because of Brexit effects and labour market supply. So I'd put them in that order in terms of confidence.
So Altaf, first of all, how long do you think Jay Powell needs to continue raising rates for? And we're at a 40-year high for inflation, so even if it comes down, it won't go down as quickly as it came.
Yep, I think that's a very good point. I think inflation has got a lot higher and is coming down more slowly than central banks are comfortable with. And so I think the market's idea that maybe we'll get some kind of a reversal midway through 2023 is a bit optimistic. We could be looking towards the end of 2023 before there's any chance of rate cuts. I think a plateauing is more likely in the second half of next year than any kind of dramatic reversal in the path of rate cut.
And yet, even with that context, possibly not a rate cut in 2023, and certainly many officials from the Fed kind of push back on that narrative, you still see a pretty sustainable rally for equities next year. Where will that be felt most acutely? Which part of the equities basket will see the most upside?
Yes, in our global market outlook, what we're kind of saying is that as US rates peak and Eurozone rates, for the reasons I mentioned, because inflation is stickier, keep rising, we should see a turn in the dollar. That combined with a lowering of risk aversion as hopefully geopolitical risk starts to come off, should see non-US markets rally more strongly than the US. So at the moment, US equities are a great place to hide. You've got the quality, you've got the safety. But we do think as the dollar starts to turn and risk aversion starts coming off, that we should be looking at markets outside of the US, in particular Europe.
Altaf, where in Europe? So you mentioned, the Bank of England. The Bank of England, after that wage growth that we saw today, is going to have a really tricky task ahead.
Yeah, I mean, I guess when I talk about Europe, I would definitely leave the UK to one side. I'm afraid, as you say, especially because of the labour market tightness we see here post-Brexit, wage growth is a problem for the Bank of England. They're walking the thinnest tightrope of all. But outside of the UK and in Europe, with the more cyclical exposure, the more higher exposure to value, we do think that will start to come good as US rates peak and risk aversion starts to come off.
Come on, Altaf, the poor old UK. The FTSE 100 is up 1% year to date. It's outperformed European stocks. It's outperformed US stocks. What's not to like within the FTSE 100?
I mean, clearly there's a couple of reasons why the FTSE 100 tends to outperform in these more risk-averse markets. One is the weakening of sterling, and obviously we saw a dramatic weakening of sterling, post the mini budget and, everything that came after that. And secondly is the sector mix. Now, the sector mix might continue to benefit the FTSE 100, so you might have a point there. If China comes back online, growth starts to rebound, and more of those kind of materials related sectors start to profit, then the FTSE 100 could have another good year. But generally, I guess if you look at the economy and the feed through from the economy, it's looking in one of the most precarious positions.
Altaf, how do you see the next 2 months panning out? I mean, we have energy prices, certainly in the UK, but in other places in Europe, frankly, out of control. We have EU leaders or energy ministers trying to find a common ground after the deadlock on natural gas prices. Is it going to be easier to find out what assets will do in general in the first quarter of 2023?
I think it's going to continue to be a bumpy ride, and our GMO is called Navigating a Bumpy Landing, so we think it's going to be tricky for a while. We do think that fixed income right now is offering some great opportunities. Cash is no longer a drag. You can go into investment-grade corporates and get a very healthy yield. So there are definitely opportunities opening up, but we would always caution investors right now to stay defensive, to look for quality, to look for fixed income opportunities. And we don't think, we're quite through it yet, but there is light at the end of the tunnel for sure.
All right, thank you so much, Altaf Kassam, their head of EMEA investment strategy at State Street Global Advisors. Coming up, FTX founder Sam Bankman-Fried is arrested in the Bahamas. We'll bring you the very latest on that. That's next, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
It's a big week for the U.S. economy, and Bloomberg's got you covered.
My head's spinning here.
First, CPI data comes in this morning.
We're seeing things work themselves out.
This is going to be a really choppy ride.
Then, tomorrow afternoon, a special surveillance will cover the Fed's last rate decision of the year.
The power of that Fed speak is declining.
Does this Federal Reserve have the commitment to keep going?
The question is, how high do they have to go?
The CPI report this morning and the Fed decision tomorrow afternoon. Right here on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 12 minutes into the European trading day. For the moment, you can see the FTSE down 0.1%. Other European equities on the rise, with the DAX gaining 0.2%. Really, investors eagerly awaiting that U.S. data, that is inflation, that may shape the outlook for the interest rate hikes into next year.
Okay, in financial services, meanwhile, Bloomberg has learned that Goldman Sachs is cutting hundreds more jobs. That's as it restructures its struggling consumer business. Joining us now is Bloomberg's Asia finance editor, Russell Ward. Russell, why is Goldman doing this? The consumer business was something that Solomon himself helped to push out. We know there's been vulnerabilities there. How significant is this?
Hi, Tom. Good morning. Yes, there's basically two reasons for this. One of them you've just alluded to, of course, is the struggles at the consumer banking business. This was, of course, the brainchild of David Solomon when he came in, but things haven't been working out. It's been losing money. Investors have been losing patience, and he announced this restructuring a couple of months ago of that division, and now we're starting to see the cuts coming through. The other reason for it is more broadly just the impending economic slowdown. We had Solomon last week warning of the possibility of a recession. He was talking about the need to be nimble, to prune, and now we're seeing the prospect of job cuts, and also, recently we reported bonus cuts as well. So really, those are the two main reasons for this decision.
So, Russell, does this reflect a change in mindset on Wall Street more broadly, or is it company-specific?
Hi, Francine. Yes, I think we're already seeing cuts on Wall Street. We had markets roiled last week. Remember when bank CEOs were warning of a pessimistic outlook? We had reports of Morgan Stanley cutting 2% of its workforce. Just the other day, we reported Wells Fargo is cutting some staff at its mortgage division. And of course, we've got the impending massive restructuring at Credit Suisse. Also news of bonus cuts across the board on Wall Street. So as we're heading into 2023, things are looking pretty gloomy for bankers on Wall Street at the moment.
Yeah, indeed. Talk to us as well about the technology component. There's a big spend. We've seen it at JP Morgan. In fact, Jamie Dimon facing some criticism from some of the banking analysts about just how much JP Morgan was spending on tech. A similar question for Goldman Sachs. The spending on technology to kind of revive these businesses, or at least positioning to take on competitors, where is that now? Have they halted that spending? How vulnerable are they on that front?
I think on the consumer front, Goldman Sachs is really just trying to downscale or right-scale this foray into its online banking. It was a very costly exercise, and that hasn't really borne fruit at this point. And so, they wanted to compete with online upstart banks and have sort of their own in-house startup in that area. But I think there's been a bit of a reality check on that front, and now they're sort of scaling it more appropriately going forward.
Russell, thank you so much. Russell Ward there with the very latest on job cuts on Wall Street. Now, FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas at the request of the U.S. government. Well, Bloomberg's Joanna Ossinger joins us now with the details. So, Joanna, do we know why he was indicted?
Well, Francine, we still have a lot that's set to come out. And we know that there are some issues people are looking into regarding commingling of funds, possible other things. But we will see those charges, at least the criminal charges, unsealed today. So in a few hours, we'll know exactly what they're looking at. And there's also the civil charges that are set to come out from the Securities and Exchange Commission. So we've got the two branches, but we'll get a lot more information in coming hours.
Joanna, there are a multitude of investigations facing Sam Bankman-Fried. Where do these other probes stand at this point?
Well, we have what the Bahamas is doing as well, so we don't know a lot about what's going on with that. I think there could be more investigations possibly from other countries where FTX had a presence, but it looks like the U.S. is kind of furthest along, and of course the fact that the U.S. prosecutors have acted is part of the reason that the Bahamas did arrest him. So basically, it looks like the U.S. is furthest along in dealing with it, and of course they have there's the House and the Senate that are also investigating, and he was due to speak in front of the House Financial Services Committee. That, of course, is no longer happening, but we do have a multitude of different entities that are looking into what's left of FTX and what has happened over the past several years and the past few weeks during the collapse.
So, Joanna, what do we know will happen today? Is his arraignment scheduled for today? Does he get extradited? I don't know what we should be looking for.
Yeah, well, we do know that his arraignment is scheduled for today in the Bahamas. And we know that we're getting the unsealing of the criminal charges from the federal prosecutors. So we will have some concrete steps happening today. We will also have the House Financial Services Committee hearing. They are going ahead with that even without Bankman-Fried testifying. So we have a number of pretty big developments that are coming up today, but we also we'll have to see exactly what happens in terms of the extradition. It looks like that's pending, and of course that could take weeks or months, depending, what the Bahamas and the U.S. agree. But we do know that there will be some big developments in the hours ahead.
Joanna, can you also help us understand this disagreement, it seems, between regulators, or at least investigators, in the Bahamas versus those in the U.S.? What is the source of that tension?
Yeah, well, there are some issues. The U.S. is looking into money flows to the Bahamas during the time of the collapse, and what exactly happened, what was going on in the Bahamas. The U.S. is also, the FTX's U.S. lawyers are saying that there might have been some collaboration between Bankman-Fried and the Bahamas at that time. So that's going to be kind of interesting, too, is exactly how the Bahamas and the U.S. interact on this, and whether they're cooperating or whether they start to come onto opposite sides on it. But yes, there's a little bit of disagreement. It looks like, although I haven't seen anything from the Bahamas saying that really opposing the U.S. at this point. It's just the U.S. lawyers saying that there could have been flows into the Bahamas that may have been improper.
Okay, Bloomberg's Joanna Ossinger on the latest in a significant turn, of course, when it comes to the FTX saga. Thank you very much indeed. Now, in interviews since the collapse, Sam Bankman-Fried has admitted major managerial missteps, but said that he never tried to commit fraud or break the law.
Now, coming up, SAP shares higher following a bumper report from its competitor Oracle. We'll look at SAP shares and some of the other main movers. That's coming up next, and this is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun.
We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
this with regard to security of supply. It's not a yes or no situation. It's not a binary one. Security of supply is important to the continent as a whole. We have to keep gas flowing to Europe. So that means that if we have an intervention, that it should be linked to the world markets.
Well, that was Belgium's Energy Minister Tine van Straten speaking to Bloomberg TV about an EU price cap on gas. Now let's get straight to the Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. Microsoft has offered its rival Sony the right to sell the blockbuster Call of Duty as part of its gaming subscription service. It's part of a bid to win regulatory approval for Microsoft's $69 billion purchase of Activision Blizzard. Sony has not accepted the proposal and has been a staunch opponent of Microsoft's bid for Activision. Oracle has reported revenue ahead of estimates off the back of a strong set of results from its digital health records unit. The US software giant sales increased 18% to $12.3 billion in the 3 months to the end of November, overcoming a general drop in demand for IT services. Cloud revenue rose 43%. New Zealand's home sales and prices tumbled in November. Sales fell 36% from a year earlier, although they were up from the previous month. The Real Estate Institute says the median house price was 12.4% lower. It blames rising interest rates and concerns around the economy for creating uncertainty in the market. That's your Bloomberg Business Flash. Tom, Francine.
Alice Atkins here in London. Thank you very much indeed. You talked about the beat when it comes to Oracle. Alice outlined that story for us. A bit of read across for its competitor listed in Germany, SAP. There was a bit of a pop at the open on the back of optimism that maybe demand for IT services isn't going to lag as much as some had expected as we head into potentially a recessionary environment. But that gain has become a little bit more muted. You're seeing upside of about 0.2% for the German software company. Again, the Oracle story is that they beat in terms of quarterly sales. Sales came in up 18% and profits coming in higher as well. So a little bit of a read across for SAP. Total Energy, this is on the back of higher oil prices. You can see their gains of around 1.2%. That is tied to the China story. More signals today that China is accelerating its reopening with all the challenges that involves. You are seeing, nonetheless, Brent up 1.9%, WTI at $74 a barrel, again of 1.7%, and the read across then to the energy sector, which is currently the leading sector across the European equity space. Total Energy part of the mix there. Of course, Chemring Group, this was a miss. This is an ammunition and explosives maker listed here in the UK. A miss in terms of its full year earnings, and the stock down about 1%. They did hold their forecast, though, for 2023. So the check on a couple of individual corporates. More broadly, across the European benchmark, you are seeing not a lot of movement, flat, in fact. You did have a really fascinating story just about the labour tightness here in the UK. Despite the weak economy, wages increasing within the private sector more than 6%. Over in Italy, the FTSE MIB up 0.2%. Futures range bound as we look across and preview that all-important CPI print. The expectations, the forecast, 7.3% for US CPI from 7.7% in October, and how that plays into the Fed's thinking. Stay with us. This is Bloomberg.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. Less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long and a persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. In custody, Sam Bankman-Fried is arrested in the Bahamas after the U.S. government files a criminal indictment. The co-founder of FTX now faces possible extradition. Inflation focus. As the Fed begins its two-day meeting, investors await U.S. CPI data that may shape the outlook for rate hikes into next year. European indices just treading water, plus cutting headcount. Goldman Sachs said to be planning hundreds of additional job losses as it restructures its struggling consumer business. So, Tom, how are things shaping up in the markets?
As you said, range-bound across the European equities, of course, a lack of conviction ahead of this all-important CPI print. Again, the forecast, 7.3%. JP Morgan saying if you get 6.9% or below, you could be looking at a 10% rally for the S&P, though they put the odds of that only at 5%. Talking of 5%, that is the size of the rally that you saw in the previous month when CPI came in softer than forecast. So, of course, looking ahead to that and how it changes, if it does, the thinking of the FOMC and their decision on Wednesday, and of course the expectations are they go for 50 basis points. Across the benchmark then, range bound here in Europe. The DAX though up 0.1%, the FTSE 100 up just 4 points. The energy complex, banks and technology are the sectors, as we break those down, that are outperforming the rest of the sectors, again, within this fairly muted market environment. Oil prices are up, Brent and WTI. Let's switch it over and have a look at the sectors then. On the back of further comments from officials and state media in China, pushing the narrative that you're going to get even more changes around COVID zero. Hong Kong as well, potentially looking to open that border, all importantly for the Hong Kong economy, potentially in January, according to some of the reporting. Again, energy at the top of the list as the sector, gaining 1%. Banks also up 0.8%. Utilities, though, down 1%. Media as well, lower by 0.9%. The pound hasn't really moved on this very strong wage data out of the UK, more than 6%. That's a record increase in wages. But gilts are being sold off. Yields are up across gilts. Fran.
Now, Tom, we're looking at live pictures out of Paris at the Ukraine Donors Conference. Now, France is hosting this international conference today, really designed to raise material and money to actually repair Ukraine's damaged infrastructure, as well as to try and underline Paris's ongoing support for Kyiv's fight against Russia. So, Mr. Macron arriving at the conference where Maria today was on the ground for us, speaking to reporters, and then she'll also host and moderate the main panel a little bit later on to try and understand the thinking of the French president going forward for his support on Ukraine. Now, the dollar fell against all G10 currencies as traders turned wary ahead of U.S. CPI data today that's seen influencing the Fed's rate path. Joining us now is Themos Fiotakis. He is Barclays head of FX research. Thank you for joining us. Themos, when you look at actually the inflation expectations, how long do you think Jay Powell still has to raise interest rates for?
I think probably until the first quarter of the year. But you know what? At the end of the day, the run rate for inflation has come down. You know, core 3-month annualized core inflation is somewhere between 3 or 4, depending on the metric. The market is looking at a lot of those high-frequency indicators to see that there is some disinflation in the pipeline. And as you said, inflation expectations are anchored lower. So at the end of the day, whether they go to 5 or 5.25, it doesn't really matter. The market is actually looking ahead. And the understanding that the level of rates that is projected is now comfortably above what the run rate of inflation is.
Okay, so it's the trend, and the Bloomberg Dollar Index is reflecting that, down about 7% from its peak. Is the dollar still looking overvalued?
So yes, for sure. And it's not just the Fed. In our research, in our work, China's reopen has been super important. At least 4 or 5 big figures of this mad rally from 98 to 105 has been due to the China reopen. And probably both those factors, favor a weaker dollar, higher euro-dollar kind of into the next year, with the one caveat that particularly euro and the pound can underperform on the back of rising energy prices, again on the back of the China reopen.
What does that mean for the rise in real yields and actually what it means for assets?
So there's a huge gap in real yields, basically, right? In the US, probably real yields are high already, and with the fact that core inflation is coming down, a boost to energy prices probably will not hurt so much. I think that the problem is a little bit more acute in this side of the world, Europe and the UK, where inflation high, inflation expectations high and rising, and the levels of rates haven't caught up as aggressively. So I think that pressure is moving on to this side.
Okay, so you talked about the importance of the China story and the importance of the energy story and the overlap there. So is euro-dollar the cross to play on that, given the uncertainty around energy? What is your preferred currency cross to play that China reopening theme?
I would actually rather not trade it through euro-dollar, probably because it's probably the weakest link in this story. I think that there are 2 trades in play in FX. The first one, as US rates peak, China reopens, vol of rates starts to decline. Emerging market high-yielding currencies, whether that's India, whether that is Brazil, whether that's South Africa, come to play. The second trade, I think, again linked both to the peak in US rates, but also the potential risks to US growth and European growth. The yen is quite focal, I think, going forward.
I mean, yen is actually one of the main things, I guess, for 2023. We also have Governor Kuroda stepping down in April of next year.
Absolutely. It's a big theme, and it's not just a theme for FX investors. It's one of the few assets that actually pay up both in a setup where inflation eases comfortably and in a setup where inflation comes down because of a recession. And it's one of the places where there's a lot of space in valuation, a lot more space than euro-dollar. You can have a 20 big figure move in the yen without much effort, basically.
We had a reminder today on the UK just of the strength of the labour market, particularly around wages. A record increase in wages in this stagflationary environment. Bloomberg Economics saying it does put 75 basis points on the table for the meeting, the decision on Thursday. Why is the pound then down, what, 0.1% in the session today, 122 on sterling?
Well, it goes back to the fact that this is the exact theme of the year this year. The Bank of England started the year with a huge opportunity of understanding the fact that between the energy costs, the tightness in the labor market, Brexit, you had a very, very inflationary situation in the UK. They could have actually been ahead of the curve. They've not done that. Sterling could have been the bullish trade of the year, and it hasn't happened because the Bank of England has been behind the curve. The Bank of England is already priced to raise rates by a lot throughout the course of the next year, year and a half. And still the question in people's mind is whether they will do that. And that's crucial. If they do that, then they anchor inflation expectations and all is well. The pound is cheap or fairly priced at the moment, that's fine. But if they don't, and inflation gets embedded, that's a big problem, not just for now, but going forward, both because of the valuation implications it has, but also because it becomes harder from the perspective of trade-offs for the Bank of England to bring it down going forward if inflation expectations.
Okay, so this is a BOE that in your view is still behind the curve on the question of tackling that inflation picture.
Given accelerating wages.
Okay, 122 on sterling. The call then in terms of how to play the China reopening is Brazilian real, maybe the Indian rupee, and the yen looking interesting as well. Themos Theotakis, as ever, thank you. Barclays head of FX Research. Coming up, don't miss our interview with Multiverse founder Ewan Blair. That is up next. This is Bloomberg.
When I started, I had no idea it was going to turn into this. This is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. We're 40 minutes into the European trading day. This is a picture across the board. European stocks pretty much flat. Again, investors really eagerly awaiting the U.S. inflation data that may shape the rest of the outlook for interest rate hikes in the Fed or from the Fed or beyond.
Okay, now UK data this morning, as we've touched on, showing wages are rising at the fastest rate in over 2 decades, excluding the pandemic, putting pressure, of course, on the Bank of England to keep hiking rates. The jump also reflects a chronic labour shortage in the UK. Joining us now to talk about his efforts to address the UK's skills shortage is Ewan Blair, CEO and co-founder of Multiverse, which helps young adults in the US and the UK gain apprenticeship placements. Ewan, good morning. Thank you for joining us. Let's start then with a question about the tightness in this labour market. I know you look at the US as well. It's a big market for you. But here in the UK, we're seeing record wages, 6% increase. What is the digital skills gap that you're seeing across your client base? Your clients, just for the viewers' knowledge, clients including Verizon, Cisco, Google, Facebook, Morgan Stanley, NHS, so blue chip names, and the NHS in there. What is the skills gap that you're seeing and what needs to be addressed?
Yeah, and it's very interesting because you're seeing this play out in a very similar way in the US too. I mean, the fastest growing areas of both economies actually are in digital, data, and tech. And businesses desperately need to hire people to meet their growth targets, to transition. Lots of them are undergoing digital transformation efforts at the moment, and they simply cannot access that talent through traditional routes. Universities aren't training nearly enough people with those skills, and actually often the courses are unsuitable for what the modern labour market needs. So an increasing proportion of them are turning to apprenticeships to actually say, right, let's reach untapped talent, so fantastic, talented individuals that are often being missed out on at the moment because they don't have degrees, and let's actually equip them on the job with skills in software engineering, data analytics, data science, project management, things the labor market desperately needs, and we're all going to need to contribute to address the productivity and skills gap.
So basically, your Multiverse uses software to select apprentices based on skills instead of grades. Is that because of the changing labor market, and how much more will that change in the next 5 to 10 years?
Yeah, it's a combination of factors. I mean, the fact is there's no correlation between academics and job performance, and there's nothing. If you look at the traditional university experience, universities deliver knowledge and support people to study in an academic environment. That's quite distinct from being highly proficient in the workplace. And as so many jobs are changing at a very rapid pace, we're going to need to increasingly ensure people have the skills to meet that change. And employers are saying, we can't get talent focusing on traditional university campuses in the same way we could before. We're going to want to reach beyond traditional talent pools. And actually, we also want to better reflect the customers we serve in the societies we operate in. So diversity really matters to us. And using apprenticeships, they can reach an incredible range of diverse talent, but also give them the skills they need from the very start in those high growth areas.
And you Multiverse recently got the license to then issue your own degrees as your apprentices actually work on the job. There is a this, you went to Yale. There's a cachet to going to an Edinburgh or an Oxford or indeed a Yale. How do you ensure that there's a cachet around the degrees that you at Multiverse will be issuing?
It's a really great question, and it's something we think about a lot, because in the end, if you think about what employers care about, it is, what can this individual contribute to my workforce? It's to what extent are they likely to stay? I'll give you a great stat. Apprentices last twice as long in their first job as graduates. They tend to be far more loyal. That's 4 years on average versus just under 2 for graduates. And at the same time, if you mentioned some of the great companies we work with, employers will look at someone's CV and see that they've been associated with brilliant organizations. And that becomes far more important to them once someone's in the labor market than whether or not they have a university credential. But the interesting thing, if you look at our degrees, is we can actually provide the best of both worlds. We can give someone an apprenticeship rooted in applied learning based on the skills of the future and those skills that are in such high demand. And at the same time, accredit that as a full degree. And these are applied degrees, not academic degrees. They're actually evidencing what you can do rather than simply what you know, which again, for employers, is far more important. And then every employer knows there is both a powerful economic case and a moral case for diversity. And if you take the UK as an example, only 4% of those claiming free school meals make it to Russell Group University. So there's a huge amount of talent being missed out on. In the US, your family income is actually a greater determinant of your career earnings than your GPA, even at an elite Ivy League university. So this system isn't working for individuals, and it's also not working for employers, which is why it's incumbent on us to use something like apprenticeships to build an outstanding alternative.
How much bigger, or how many more in terms of numbers can apprenticeships become? And actually, what about those that don't qualify for becoming an apprentice? How do you, I guess, mismatch that skills shortage in the UK?
Right. So we have probably about 75 to 80 applicants to every single position. So there is a huge pool of talent there. There is massive demand for apprenticeships from individuals. If you look at the US, apprenticeships are a relatively new concept there in tech and professional services. So we're doing all we can to make employers aware of the opportunities that exist there, to increase the amount of apprenticeships on offer. And we're having a lot of success there. It's the fastest growing part of our business at the moment. And then if you look at what we do to people who don't go and take on apprenticeships, we give them access to online training. We give them access to various kind of skills opportunities. We work with a whole range of partner organizations and charities to help equip them so that they can access other opportunities, even if they can't access ones via an apprenticeship through us.
Ewan, a lot of money's flowed into EdTech. You guys are valued the last time in the summer of this year at around $1.7 billion US. Congratulations, firmly, of course, in unicorn territory. The last time you talked about this, you said profitability isn't core to the business. I just wonder, are your investors putting pressure on you around moving to profitability faster? And what are you thinking about in terms of IPO?
So I think we're seeing a big focus, and actually probably quite a welcome focus, on sustainable businesses, not simply growth at all costs, but ensure there is a path to profitability. We certainly have that path. We have a lot of cash in the bank. You'll have seen how much we've raised. We've got plenty of runway, but we're still hiring in every single position of our organization. We're still growing incredibly quickly, and we're still hitting all of our targets. So we feel we're in a really strong position on that front. We're not thinking about IPO or anything similar at the moment. We're just trying to expand the apprenticeship concept even further, continue to grow in the US, where, by the way, we're already in 9 cities, and increase our scope of operations in the UK.
Ewan, thank you so much for joining us. Ewan Blair, they're the Chief Executive Officer and co-founder of Multiverse. Now let's get straight to the Bloomberg First Word News with Alice Atkins. Hi, Alice.
Hi, Francine. Former FTX CEO Sam Bankman-Fried has been arrested in the Bahamas after the US filed criminal charges against him. A New York attorney says the arrest was made at the request of the US government. More than 100 FTX-related entities filed for bankruptcy last month, and Bankman-Fried is facing investigations into a range of possible misconduct. EU nations have reached a deal to clear the way for Ukraine to receive 18 billion euros in aid after Hungary dropped its opposition in exchange for a reduction in penalties over graft concerns. Other countries also agreed Hungary's pandemic-era recovery plan, which entitles it to 5.8 billion euros in grants. Budapest will still need to implement measures to bolster the rule of law. Bloomberg understands some 600 members of Britain's armed forces are being trained to drive ambulances, with the military also asked to cover for bodyguards. This as the government warns of significant disruption to the UK's health service as nurses and ambulance staff prepare to go on strike in the run-up to Christmas. Workers across several industries are striking over pay given the rising cost of living. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice Atkins, thank you. Coming up, Hong Kong is scrapping some of its remaining COVID restrictions, including curbs on international arrivals into the city. More on that story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. 52 minutes into the European trading day. There's one piece of data that everyone is eagerly awaiting. It's, of course, U.S. inflation. Investors are really on edge until we have that figure that may shape the outlook for interest rate hikes going forward, Tom.
Yes, central, absolutely, that CPI data. Let's get back to what's happening in China. Hong Kong is scrapping some of its remaining COVID restrictions, including curbs on international arrivals. It follows Beijing's rapid shift away from its zero-tolerance approach. Here to discuss what this all means then for the virus and its containment is Sam Fazeli. Sam Fazeli, Director of Research at Bloomberg Intelligence. Sam, thank you for coming on set this morning. I'm just kind of really fascinated by how quickly Beijing has changed tune on COVID zero. I'm messaging with people on the city, and they've all got the virus, having essentially had no exposure to it for the last 3 years. What does that mean for Omicron, if indeed that is the variant that we're seeing rip through China? What does it mean in terms of potential for further variants? What does it mean as China tries to adjust to this new reality?
Yes, so I think we're all baffled by the way that they've gone about it. I think logic doesn't seem to apply here, apart from there's not much else we can do. We've done the best we can. We've got the blueprint of what the West did and what happened, so let's just let it rip, which is what I think is going on. With regard to variants, remember that every time the virus infects a person, jumps to another person, there is likelihood to be some mutation occurring. But we have to be cognizant of the fact that the virus has already had pretty good time to practice on us. And that's what we've done. And I don't think the genomics, the genetics of the Chinese population are that different for suddenly a very different variant to occur. And last point I'd make is that the two most troublesome variants, Delta and Omicron, both came from chronically infected people, not high levels of transmission. So that's something to think about. I doubt there's going to be very significant shift again.
Sam, I think we were hearing from the former deputy of the Chinese CDC, who was basically saying in this first wave, huge wave, around 60% of people could be infected. What does that mean for boosters?
Yeah, so first answer point, I want to take you back to all the modeling that was done during the takeoff of COVID. They were all wrong.
Yeah.
Basically, in the end, everybody
But we have more data now.
Yeah, but basically everybody gets infected at the end, right? Whether it's 60%, 40%, 70%, it all depends on behaviors. And, the Chinese are better at wearing masks, etc. But in terms of boosters, absolutely needed. You keep hearing this number, 40% of over 80s have had boosters in the US, in China. 3 shots, that is. You need to get that up. So we did a calculation we published this morning that to get to the target that China has by the end of January, 90% of over 80s boosted, 95% of 60 to 79, they need about 95 million shots. And that's 1.5 million per day if you do it every day. The latest data was 44,000 per day. Big push is needed here to get people to roll up their sleeves.
Okay, Sam, just very briefly then, given all the caveats around modelling, what are you looking at in terms of potential hospitalizations and deaths then?
Yeah, so you can make a range. I think I've come out with something like 5 million or so.
That's hospitalizations or?
Yeah, because all I did was
deaths?
take, no. Deaths, so I was at about 600, 700. Right. But all of that is, I reckon those numbers could be anything from 300 to 2 million. That's really difficult to pin down because it depends on people's behavior.
All right, Sam, thank you so much. As always, Sam Fazeli, their head of Bloomberg Intelligence, of course, specialist also in COVID. That's it for the European Market Open. Surveillance Early Edition is up next. We'll have a full roundup of not only UK wages and the immense pressure that puts on the Bank of England, we'll also have a full roundup of what we can expect with US CPI later today. This is Bloomberg.
changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. In custody, Sam Bankman-Fried is arrested in the Bahamas after the U.S. government files a criminal indictment. The co-founder of FTX now faces possible extradition. Inflation focus. As the Fed begins its two-day meeting, investors also await U.S. CPI data that may shape the outlook for rate hikes into next year. European indices are mixed in early trade. Plus, cutting headcount, Goldman Sachs is said to be planning hundreds of additional job losses as it restructures its struggling consumer business. Now, first thing is first, we have a number of stories we want to get to, but let's check on the markets. It's all about that CPI print. And when you look at European stocks, much like U.S. futures, they're pretty much unchanged. So we're seeing a flat Europe 600. Again, I guess the focus is because of forecasts, inflation from the U.S. and the fact that actually we're expecting it to post the lowest figure this year, therefore possibly warranting a less hawkish Federal Reserve. We're seeing a little bit of bounce back for U.S. futures. Certainly they're pretty steady. And then I would watch, of course, for any dollar strength. 1,265. We chose the U.S. dollar index. We could have chosen euro dollar. We'll show that a little bit later on. Now, the dollar fell against all G10 currencies as traders turn wary ahead of U.S. CPI today. That seemed influencing the Fed's rate path. So that's the big picture across the board. And then sterling, you can see 122.70. We also had some pretty extraordinary wage figures out of the UK. What's interesting is that inactivity from older groups is also slowing down. So more people returning to the workforce. We don't know whether that's long-term COVID abating a little bit or whether it's actually because of the cost of living crisis. Now, for more on all of this, we're joined by Eddie van der Veld from our Markets Live team and Deputy Chief Economist of Althea Capital. She is Sharmila Whalen. So, Eddie, let's start with you. When you look at the data, I mean, it's all about CPI today. Frankly, no one cares about anything else unless we have a big piece of news. What are you expecting from CPI?
Yeah, absolutely. I've never seen this much anticipation of a data point, frankly, as I have seen for the CPI just this month. But I think that makes sense, right? Because I think our Santa rally depends on it this time around. If we don't get a downside beat here, then I think you're going to really struggle to see stocks pushing on towards year end, which is what, I think the market really is hoping for. But I think there's a lot of caution to be had about this number, because for this month, for a change, we had the PPI number before the CPI number, and those two have a very high correlation, but the PPI came in hotter than people expected. So I think anticipation is for a good reading. I think the market may just be a little bit disappointed.
But Eddie, overall, and we're seeing the split also, with the FOMC members, is that how long can Jay Powell continue rising interest rates? And this boils down to basically, even if we see a tempering of inflation, even if it's coming down, it's not going to come down as quickly as it went up.
Yeah, absolutely. Look, I think the Fed, obviously, I think whatever they're going to do this time around, they're going to do this time around. I don't think the Fed's path is going to change at this meeting. I think what we're talking about now, when we get today's reading is the terminal rate. And the terminal rate, I don't think is by any stretch of the imagination baked in. We've seen how much that's adjusted over the last year. So I think what we're really talking about is what they're going to do next year. And I think, therefore, there is a lot of scope for changing the Fed's thinking.
So, Sharmila, what's your take when you look at, and welcome to the program, when you look at what we're expecting from U.S. CPI, could it actually change the way we look at all asset classes?
I don't think so at all, Francine. I agree with Eddie that, Powell has obviously signaled that rate increases are going to moderate. The market is widely expecting a 50 basis point increase, but this is not going to, A, interest rates have not peaked, and B, this is not going to save the U.S. economy. It is still headed for a recession, and the markets are behind the curve in terms of earnings adjustments.
We're also getting some earnings news, so I'll get to that in a second, but Lufthansa shares are rising 3.5% after it's raised its earnings forecast. It's actually now seeing full-year adjusted EBITDA, a bit jargony, but it's basically better than I was expecting it before. So they're now seeing that figure at 1.5 billion euros instead of the 1.1 that we were expecting. Overall, Sharmila, and I know we're here to talk about, inflation, CPI, and data, but it does seem that there's a big boost to a lot of the airlines. We heard it from IATA. We heard it, of course, from Lufthansa right now. Does it give you hope about the world economy going forward?
Absolutely not, is the short answer. And I know that's a bit strident, but, this cost of living crisis is acute. It's going to get worse. And, there's going to be nothing left for discretionary spending, right? And, things like Lufthansa Airlines, it's travel and discretionary spending. So if it is rallying, it's rallying in a bear market, and I would look at it as an opportunity to sell off and get out.
Okay, and did you agree with that? I mean, when you look at discretionary spending, and again, for the moment, there are certain countries where saving has been quite significant in terms of the portion of what's inside the bank.
You know what? I'm a little bit more optimistic about the world economy as we go into 2023. I think on the one hand, I've had three tenets for which can bring us this positive surprise. One is China reopening. That's already happening. Number two is Europe avoiding an energy crisis. I think slowly but surely we're learning that while the winter is cold, Europe seems to be passing that first test. And the third is a more dovish Fed than the market's expecting right now. I think that if we see a US recession, it will be a Fed-engineered recession. And therefore, the gift is in the Fed's hands to avoid it. And I think 50 basis points now, an even slower pace of hikes going forward.
Sharmila, how ugly do you think the US recession is?
I think we are looking at a downturn, but I think Europe is looking at a bigger downturn. I think Europe is going to be the epicenter of this global downturn. It's this real wage squeeze that you're seeing, right? And again, the savings, there were huge savings buffers created during the pandemic, but what is astonishing is how quickly they're disappearing. So if I can just give you two numbers, if you look at the European household savings rate, it peaked at about 25%, and now it is at 13%. If you look at US household savings rate, it peaked at 29% of disposable income. Now it's at 7.4, which is below the long-term average. So where is the spending coming from? And if there's no spending, it's going to hit corporate profit margins with the input price increases as well, and that'll have knock-on effects on investment as well.
But Sharmila, as long as the job market actually remains resilient, and that's a big question, do we kind of muddle through even in Europe?
See, I think job market is always a lagging indicator, right? And you're absolutely right. Even you look at the UK, the unemployment numbers at about 3.6. The numbers still very, very low. You saw the US jobs market data out last week, which was better than expected. But I think it's early days.
Eddie, when you look at UK jobs, actually, this was quite incredible looking at the pressure on wages. How much does it complicate the BOE's job?
Yeah, absolutely. Look, Cheryl makes some really good points there, and I do think that there is prospects for weakness. But the jobs market, as you point out, particularly in the UK and elsewhere, is still really strong. And it makes it really hard to make the case that we're about to hit a recession if the job market is doing really well. But there are worrying indicators, and things like the, in the UK in particular, the housing market, I think, is a big swing factor. But I think the flip side of that is, even if we do see these recessions hit, particularly in Europe, maybe in the US, I think they might not be as severe, and asset prices may already have baked in a lot of that bad news. So I think as we go into 2023, investors might start turning a lot more positive.
All right, Eddie and Sharmila, thank you so much for joining us. Eddie van der Vout there from our Markets Live team and Deputy Chief Economist at Althea Capital, Sharmila Whalen. Now, coming up, Sam Bankman-Fried is arrested in the Bahamas. We'll bring you the latest on the fallen co-founder of digital asset exchange FTX. That's coming up next, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
The secret success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. You know, how do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
Economy, and Bloomberg's got you covered.
My head's spinning here.
First, CPI data comes in this morning.
We're seeing things work themselves out.
This is going to be a really choppy ride.
Then tomorrow afternoon, a special surveillance will cover the Fed's last rate decision of the year.
The power of that Fed speak is declining.
Does this Federal Reserve have the commitment to keep going?
The question is, how high do they have to go?
The CPI report this morning and the Fed decision tomorrow afternoon. Right here on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas at the request of the U.S. government. His arrest comes after weeks of speculation that client funds were misused before his empire's collapse. Now, for more on all of this, let's get straight to our Bloomberg senior crypto reporter, Joanna Ossinger. So, Joanna, good morning or good evening where you are. What do we actually know?
Hey, Francine. What we actually know is that we're going to know more in a few hours. We don't have a lot of details about the criminal proceedings from the federal prosecutors. They're unsealing those in the U.S. morning, so we'll find out about that. There are also some civil charges that the Securities and Exchange Commission is going to bring relating to alleged violation of securities laws. So we should be getting more information on that as well. and we'll find out exactly what the Bahamas is intending to do. We know, of course, that they've arrested him, but we'll be possibly getting more information on exactly what the process might be with the potential extradition and other things that the Bahamas intends to do.
So where do the other investigations into FTX actually stand?
Well, there aren't a lot of details on other investigations outside of that at this point. And of course, there could be all sorts of things related to the other entities, other places, other countries in the world where FTX might have had operations. But right now, the main ones, it looks like, are from the US. And some people have been saying it's possible that they have some pretty strong evidence if they've moved this quickly. It is just about a month after this whole thing went down. So that's pretty quick in legal terms, but that's the main thing. We also do have the U.S. House hearing that will go on, even though Sam Bankman-Fried isn't going to testify as he was intended to do. We have the U.S. Senate hearing on Wednesday. Sam Bankman-Fried had said that he had not intended to be at that one. So we do have other things from the legislative side as well, but it looks like the U.S. cases are the ones that are coming in the fastest.
All right, thank you so much. Our Bloomberg senior crypto reporter, Joanna Ossinger. And in interviews since the collapse, Bankman-Fried has admitted major managerial missteps, but that he never tried to commit fraud or break the law. Now, Bloomberg has learned that Goldman Sachs is drafting plans that could cut at least 400 jobs from its loss-making retail banking operations. The retrenchment comes as the Wall Street titan restructures its struggling consumer business and braces for an uncertain economy next year. Now, for more on all of this, let's talk to Bloomberg's Marion Halftermeyer, one of our wonderful reporters who breaks a lot of news on the banking sector. So first of all, Marion, good morning, and it's nice to see you in London. So can you talk to us about actually how many job losses or job cuts can we expect at Goldman Sachs?
So we're looking at about 400 or so job cuts, specifically for their consumer banking unit. Now, this goes a bit beyond what we're seeing across Wall Street right now, where a lot of bank CEOs have been warning, look, we're not expecting a great outlook for next year. Markets are down. You know, we might see some cuts in jobs and bonuses coming down. So, but this goes a bit beyond that in the sense that Goldman has recently been withdrawing from this consumer banking strategy that they had put in place. So this kind of shows that they're not so hot on this topic anymore, and they're going to be calling back there.
So is this, I mean, and you mentioned this is one bank and many that are actually cutting jobs on Wall Street, but is it, you know, Goldman specific, or do you think this is a wider trend overall?
I think this particular case, it's Goldman specific. This really goes into, they had this whole pitch to go into retail banking to try to be a bit more Main Street rather than investment banking Wall Street. But it does play into this whole idea of austerity and cost savings as well.
Marion, you're also one of the reporters that breaks, of course, the most news on Credit Suisse. Yesterday, we heard the departure of, I think, the head of Greater China and other departures here in Europe. Like, where do we go next on Credit Suisse?
Listen, I think they're trying to make it to the end of the year without another big news, but we're really going to be looking at how are they going to implement the restructuring next year. You know, we're going to get some news on whether or not they're entering the next phases of the cost cuts and job cuts, and then we'll see how bonuses look for them as well. I mean, it's not going to be great, and they're going to need to try to hire some more talent as well, which is not a great environment right now.
Yes, do they need to pay them more to make up for, I guess, reputational damage?
There is that color coming through of just having to retain bankers, particularly for the Credit Suisse First Boston angle. They're kind of having to pay up and poach people from different banks. Otherwise, you know, people are leaving, and it's a bit hard to pay up at this moment. So,
I mean, will they be relieved that actually the rights offer is like behind them, and so they can actually focus on execution of the plan?
I think they're definitely going to be relieved to stop seeing the stock price swing so much, and they can focus on execution. They've got the money in the bag, but they have to work a bit harder on convincing investors about this plan.
All right, Marion, thank you so much. Marion Halftermeyer there, one of our banking reporters, usually based in Zurich. Now, coming up, we'll have plenty more on the UK and, of course, the wage pressures that we've seen across the board. So we look at gilts. We also look at what else is going on in the UK. We speak to Bettina Schaller, president of the World Employment Confederation. That interview coming up shortly, and this is Bloomberg.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This, with regard to security of supply, it's not a yes or no situation. It's not a binary one. Security of supply is important to the continent as a whole. We have to keep gas flowing to Europe. So that means that if we have an intervention, that it should be linked to the world markets.
Well, that was Belgium's Energy Minister, Tine van der Straten, speaking to Bloomberg TV about an EU price cap on gas. Now, European countries are also meeting in Brussels today to really reach a preliminary agreement to clear the way for Ukraine to receive crucial aid from bloc after Hungary dropped its opposition. That's actually the event in Paris. The other event we're watching out for is the EU trying to seek to break a deadlock over capping natural gas prices. So the plan to intervene in the market, basically unveiled by the European Commission last month, has caused a deep rift amongst member states. So we're watching for any live pictures coming out of Brussels to see whether there is agreement. Of course, there's, again, a couple of different blocs, countries led by Germany, the Netherlands, and Denmark, calling for a pretty cautious approach. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. China's warning it faces a steep surge in COVID cases as it rapidly dismantles pandemic controls, with one of the country's top virus advisors saying a jump in infections is, quote, surely unavoidable. Hong Kong, meanwhile, is removing its 3-day ban on international arrivals going to bars or eating at restaurants and scrapping a contact tracing app used for entry to public venues. Now, EU nations have reached a deal to clear the way for Ukraine to receive 18 billion euros in aid after Hungary dropped its opposition in exchange for a reduction in penalties over graft concerns. Other countries also agreed Hungary's pandemic-era recovery plan, which entitles it to 5.8 billion euros in grants. Budapest will still need to implement measures to bolster the rule of law. Bloomberg understands some 600 members of Britain's armed forces are being trained to drive ambulances, with the military also asked to cover for border guards. This as the government warns of significant disruption to the UK's health service as nurses and ambulance staff prepare to go on strike in the run-up to Christmas. Workers in across several different industries are striking over pay, given the rising cost of living. And China has filed a dispute with the World Trade Organization against US export controls on microchips. Beijing says the restrictions threaten the stability of the global supply chain. Meanwhile, Bloomberg has learned that Japan and the Netherlands have agreed in principle to join the US in tightening export controls on chip-making gear destined for China. The two countries are likely to announce measures in the coming weeks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now we're looking at currencies. Of course, currencies never dull, always interesting. I'm looking at dollar. Look, the conversation on dollar is definitely what the Fed does on the back of that CPI figure today. If you look at what the markets are expecting, and we had a beautiful piece of Bloomberg Intelligence looking at what the Fed will do in terms of hikes. The Fed could slow hikes to 50 basis points, and that, of course, has implications for dollar looking forward. We had another piece of research saying that in 2023, the dollar looks set to weaken against the Asian currencies for the next 12 months. Now, the other piece of news, of course, we're watching out for, it's what's happening in Paris. Now, the European Commission, Ursula von der Leyen, talking at the moment at the Ukraine Donors Conference. Our Maria Tadeo on the ground there, trying to quiz leaders across the world about what exactly the plan for reconstruction going forward is. We know that she'll also be speaking to Emmanuel Macron. This comes 12 hours after European Union countries reached a preliminary agreement to clear the way for Ukraine to receive a pretty crucial aid from the bloc after, for example, Hungary dropped its opposition. Coming up, fresh UK employment data is out. We'll discuss it with Bettina Schaller, the president of the World Employment Confederation. That interview up next, and this is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, UK data this morning showed wages are rising at the fastest rate in over 2 decades, excluding the pandemic, putting pressure on the Bank of England to keep hiking rates. The jump also reflects a chronic labour shortage in the UK. I'm not sure why we're seeing pictures of Sam Bankman-Fried, but that's our other big story. So we look at wages, wage pressures, what that means for employment, and of course we look at the fallout in the crypto world. Now, to talk more about wage growth and of course the place for the labour market being so tight in the UK and elsewhere, we're joined by Bettina Schaller, President of the World Employment Confederation. Bettina, thank you so much. As always, I'm really looking forward to our interview because you always make us smarter on some of the underlying currents in the labour market. So looking at it from where we are, it's a tight labour market, frankly, in G7 countries. Wage pressure is really extremely high because of the cost of living crisis. How bad, first of all, is the skill shortage in the US, in the UK, and elsewhere?
Well, I'd love to give a good news here, but the skill shortage is bad. It is bad, and it is bad due mainly to 2 major factors that are pushing businesses out there to transform. One is obviously that digital, the technology piece, and with COVID, we've seen it. People are required to have more and more skills in that space, and they just don't have it. So there's a big lag when it comes to the skills there. But then we're also seeing the green transition as one of the factors that causes that lack of skills of workers in the market. So that skills mismatch is a real issue, and it's one we need to act fast on. We need to get governments really active on identifying policies that will allow people to get re-upskilled even more than now. We've been talking about it for years, and we see certain activity, but that is not fast enough. And actually employers as well need to act fast on that one.
But Bettina, who's getting it right? So here in the UK, for example, I mean, the wage price growth was really pretty incredible. And we're seeing, for example, some of older workers coming back into the labor force. Is this because of the cost of living crisis? Or are we going to see that trend in other G7 countries?
I mean, look, older workers will be coming back to the workforce. Why? Because there's another trend that is looming, and that is just the effect of demography, right? I mean, we will be missing out workers in the labor market. So that's going to happen in any case. If you ask us getting it right, well, it's those countries, again, that, are able to link the requirements of the labor market to what the education industry, if I may say so, is actually providing. So there we see the biggest adjustments as it is. Now, on the wage spiral, because you've alluded to that a few times, we actually, to be honest, we don't see such a huge, massive effect there everywhere. The UK, yes, there it is an issue. And of course, wage inflation had to adjust to overall inflation. We've seen the same in the United States. So UK and United States are the 2 big countries. There's only 2 countries where there is a link of inflation to wage inflation. That's Belgium and Luxembourg. But in other countries, and mainly those countries that have collective bargaining and negotiation at the heart, things have actually been slower. What I'd also like to say, Francine, of course, we talk here generalized in general terms. Always have to differentiate, though, right? Again, per countries and by sectors. So there's certain sectors where things are a little bit more stable.
Bettina, when you talk about the risks of a wage price spiral, and this frankly is the nightmare of every central bank around the world, are we there yet? If you look again at the price, even the strikes that we see in the UK and this price spiral in the US, have they lost control?
Francine, who am I to, have the silver bowl on this question? But again, if we look around, to other countries, we don't see it, that harshly. So we think that overall the economy is going to slow down, right? I mean, that's going to happen, and the demand for labor will also slow down. Bigger employers are hiring more selectively. As I said, they need to watch out these days. So they're really going for those roles that they need. And I mean, central banks, they are tightening their monetary policy, aren't they? So, overall, we hope that break on inflation, that it will come. And so that wage spiral, as far as we see, might not be as bad as expected.
So, Bettina, I mean, this is, no one has a crystal ball, so I know I'm asking difficult questions, but how are you expecting, the labor market force to go in 2023? Are there going to be industries and sectors that will start back hiring? If you look at technology, it seems they're losing jobs. If you look at finance, it also seems we're looking at cost cuts and job losses.
Yeah, look, the adjustments are happening, right? And this is really what this is all about. I mean, the technology sector clearly has been losing jobs. We see what many other people see there as well. It's been an adjustment, right? There's been some planning there, and obviously some course correction that is happening there. Having said that, we're actually super excited about all this tech talent that is, let's not say flooding the labor market, but that is out there now, because there's a lot of sectors that need exactly those skills. In terms of, therefore, industries, I mean, to us, still information and communication are areas that are going to grow. Activities, electricity, gas, steam, air, and air conditioning supply. I'm looking at here. Real estate is going to grow. Actually, financial insurance is going to grow. So we still see areas and industries that are going to grow for sure.
And Bettina, across the world, and again, I know it's very different, but we keep on talking about a skills shortage. Are governments, really around the world, especially developed markets, just behind in getting their workforce up to scratch in terms of the skills needed?
I can say they're generalizing, yes, they are. Yes, they are. And there's another correlation that we also see, and that is linked to how private employment services can actually unfold their activities, because this is actually the moment where you need those specialized actors who can help facilitate or bring a solution to the situation as it is. When it comes to helping employers to review what the issues are, when it comes to adapting sector-specific approaches to the staffing and the skills shortages, when it comes to actually delivering agile solutions, this is where we see a lot of governments not actually embracing that there are certain players in the market who know how to do this and who obviously now are best placed to step in as well.
Bettina, as always, thank you so much for joining us. Bettina Schall, there, President of the World Employment Confederation, joining us this morning with some great insight. Now, Ukraine's Prime Minister and France's Finance Minister Bruno Le Maire are also due to speak at 3 p.m. UK time at a discussion moderated by Bloomberg's Maria Tadeo. It's going to be a great panel, of course, looking at, the EU yesterday breaking logjam on Ukraine aid with the deal, and this is after Hungary dropped its opposition. So we'll have a full roundup also on some of the reconstruction help. You can watch that panel using the Live Go function on your Bloomberg terminal. And this is Bloomberg.
Has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, we're getting a couple of breaking news. First of all, China, left, right, and center, really as China bracing for many COVID infections over the winter. It's now said to delay the economic policy meeting amid the COVID surge. We're also getting a number of reports from banks with trading desks really being left empty. We'll monitor the conversation and, of course, the situation in China. Then the other story, Goldman Sachs shifting some of its Euro swaps trading desk from London to Milan. Now, it's the latest example of roles moving to continent after Brexit. Now, former Italian Minister of Education Letizia Moratti is currently visiting London to tour the city and drum up more business for Milan. Now, Letizia was also mayor of the city between 2006 and 2011, previously served as chairwoman of UBI Banca, and she joins us now. Letizia Moratti, thank you so much for joining us. First of all, it's great to see you in London. I know you're here to also drum up support for Lombardy and other parts of Italy. You recently left a very key role for the Lombardy region. Why was it no longer right to be in that center center coalition? Really?
Thank you, Francine. Thank you for being here. First, let me say that it's great to be here in London. I met yesterday very important financial investors, both Italian and international, to bring to Lombardy region investments. We are discussing to raise $1 billion investments to help the development of the southern region of Lombardy, south of Milan. There are important areas that need to be regenerated with housing, with infrastructure, with commercial activities, with a research center. And I'm happy because the yesterday meeting was fantastic. So I'm really thrilled about this opportunity.
And is this UK investors, and do they have questions about the current political climate in Italy?
Well, they are international and national investors. They look at Lombardy region in a very positive way because of the stability of the Lombardy region, and because, if I may, Lombardy region could be seen as a AAA. So it's there are no problem on investing, and we are really discussing about this. And of course, I'm happy that Goldman Sachs has decided to move the swap trading desk. Of course, the swap trading desk, but others are moving or reinforcing hiring in Milan, like Citibank, like Morgan Stanley, like and others will come. So this is because Lombardy region is a fantastic region in terms of connection with the rest of the world.
I mean, let's see, many questions also, though, about the political system. So you recently left the center-right coalition. Why?
Well, because I was in disagreement with the policy of the government about vaccination. So this was the reason. Lombardy was the first region that was hit and very hardly. So I think that we cannot, we have to be careful and protect our vulnerable people. And therefore, I was in disagreement, and that's the reason why I stepped down.
Do you see another COVID emergency, actually, as we get into the winter, into early 2023?
I think we have to be careful. I think we still need to have protections, especially for vulnerable people. I think we need to have to let people understand that the protection are needed in order to not to have problems like the one we had before vaccination. When I came into the region, I came to protect people, and the problem were quite high. I succeeded in a very good plan of vaccination, which put the Lombardy region first in Italy and among the first territories. But now it's not just COVID. I mean, COVID is something very important, but COVID and the war in Europe and the energy cost are putting us in a condition to try to develop and build a better environment for families, for companies to be competitive in a very competitive environment. That's why I'm here, because I believe that the link with the financial institutions is key for them.
Yes.
Absolutely.
But you also have political ambitions, and you're one of the most respected businesswomen in Italy. What exactly do you think Italy needs now in terms of the relationship between, for example, Italy and the EU, Italy and the rest of the world?
Well, I think, yes, we need to be to understand that Italy can play a very important role in Europe. I think, unfortunately, we had Mario Draghi, who was a fantastic leader, but I still think that Italy, with being a founding member of Europe, can play a very important role. I believe that the region can play an important role because in some way European Union is a rigid model, and the veto rights of countries are sometimes impeding Europe to be more dynamic, which is what we need now. I mean, Europe needs to compete with the rest of the world, and we don't have raw materials. We are a transforming economy in Europe, so I think that the role that regions can play, being a sort of macro region together, connected with infrastructure and relate and putting the resources and the talented people and everything that we region can put, this could allow Europe to be more competitive.
We have a new government in Italy. How do you think they're doing?
Well, I think that in terms of the governments, I think need to be consistent with the European what Europe is asking, meaning that we have to comply with the PNR requirements, the milestone, and I think the government will have to comply and to be coherent with the reforms that Europe is asking to Italy and that are important for Italy. It's not just important for the government, they are important for Italy. Reform on public administration, reforms on justice, reforms on all the reforms to simplify the way you do business, the way you serve people. It's an important part. So I think PNR is an important opportunity. Pity that the government is not decided to take the money of MES, which could be very good for health, but okay.
Okay, so the jury is out, I guess, is maybe how we describe it. Letizia, thank you so much for joining us. That was Letizia Moratti, the former Italian Minister of Education, Universities and Research, amongst many other titles. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sources tell Bloomberg that Goldman Sachs is planning to cut at least 400 positions from its loss-making retail banking operations. The plan goes beyond the bank's annual exercise of weeding out underperforming staff. CEO David Solomon has also recently signaled he's reviewing other divisions to manage headcount and also limit costs. Microsoft has offered its rival Sony the right to sell the blockbuster Call of Duty as part of its gaming subscription service, as part of a bid to win regulatory approval for Microsoft's $69 billion purchase of Activision Blizzard. Sony has not accepted the proposal and has been a staunch opponent of Microsoft's bid for Activision. Oracle has reported revenue ahead of estimates off the back of a strong set of results from its digital health records unit. The U.S. software giant's sales increased 18% to $12.3 billion in the 3 months to the end of November, overcoming a general drop in demand for IT services. Cloud revenue did rise 43%. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Coming up, EU nations reach a preliminary agreement to clear the way for Ukraine to receive crucial aid from the bloc. We'll get the latest from Paris, where an international conference to raise money for Ukraine is taking place. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, EU nations have reached a preliminary agreement to clear the way for Ukraine to receive crucial aid from the country or from the bloc after Hungary dropped its opposition. Well, meanwhile, France is also hosting an international conference to raise money for Ukraine today. President Emmanuel Macron welcomed the Ukrainian Prime Minister along with a big delegation.
We want to help the Ukrainian people to resist through this winter. Concretely, we want to give commitments to deliver generators, help repair infrastructure, deliver LEDs for lighting, etc. So this is very practical, because today, at the heart of Russia's offensive is to plunge the Ukrainian people into despair.
And in the morning, the conference will take place, of course, at the Foreign Ministry. Now, later on, Bloomberg's Maria Tadeo moderates the business part, taking place at the Finance Ministry. Maria joins us now from Paris. Maria, great to have you on the program. So Emmanuel Macron hosting this conference in Paris. What can we actually expect from it?
Yes, Francine, and this is a pretty big deal for the French government today, which has really rolled out the red carpet for the Ukrainian delegation that is being led by the Ukrainian Prime Minister. We also heard from the Ukrainian President himself, Volodymyr Zelensky. Now, the French President says a conference like this at this point, it's important because the West needs to look to the future, to life after the war, to begin working and pooling resources to rebuild this nation. And Francine, you know the numbers that have been thrown out there are incredible. At one point, some suggestion that this could be a $1 trillion effort. The other issue, and this is on the medium and short term, is the power generators, helping Ukraine to deal with a very cold winter. Emmanuel Macron says he wants to see a real concrete proposal come out of this meeting today that's been happening or is going on underway in Paris for this terrible situation that is going on with the lack of power, the rolling blackouts for Ukraine as temperatures go minus. There will also be a business part, and we will debating or dedicating a summit with the French finance minister and the Ukrainian prime minister about connecting the two sides on this huge, massive fundraiser effort.
Yeah. So, Maria, how much of this is about the money and how much of it is just to make sure that people keep on talking about Ukraine and the reconstruction efforts on infrastructure?
Absolutely. And Francine, I really think you nailed it on that point, because the French president also said that this is not just about the cash. It's not just about talking money. It's not just about bringing all of this funding together, connecting companies, but it's also about sending a picture and sending a message to the people of Ukraine, quote, that they are not alone, that they have not been forgotten. This war now in its 9th month, the French president says, continues to be a priority. And of course, no one in Europe will be safe until there is peace in Ukraine.
All right, thanks so much, Maria Tadeo, there with the very latest on this conference, and then watch Maria's great panel. Ukraine's Prime Minister and France's Finance Minister Bruno Le Maire are due to speak at 3 p.m. UK time in a discussion moderated by Maria Tadeo. You can watch that using the Live Go function on your Bloomberg terminal. Now, Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kate Lyons in New York. Our Anna Edwards is here in London, and this is Bloomberg.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Whilst things have certainly accelerated in the last few hours, I think many will feel, in fact, like Sam's arrest is in fact overdue. We need to flesh out the bad actors. You really need regulation, and to show that rule of law is important.
Is really a landmark case, and it will, in many respects, define crypto regulations for exchanges going forward.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lyons.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas. U.S. prosecutors filed criminal charges and will now seek his extradition. Investors waiting for today's U.S. inflation data. The CPI print could shape the outlook for Fed interest rate hikes. And more job cuts on the way at Goldman Sachs. Hundreds of positions are likely to be cut from Goldman's money-losing retail banking operations. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. And Kayleigh, the session in Asia, some moderate moves there, modest moves here in Europe, really. We wait for the US session to really kick in, and certainly the data in the US session will be front and center, as will the crypto news flow.
Yeah, we'll definitely be watching those FTX hearings on Capitol Hill beginning at 10 a.m. Eastern time. But before we can get there, Anna, we have to get through CPI at 8:30. And really the trajectory of inflation and what it means for the trajectory of Federal Reserve policy next year is really what the market is waiting for clues on. So as you said, not too much movement and conviction in Asia overnight ahead of that print. Yes, we were higher, but only by a modest about 0.2% on the MSCI Asia Pacific Index. Where your outperformance was coming from was Hong Kong. The Hang Seng up by about 0.7% as we continue to get incremental reopening news. Hong Kong scrapping that 3-day COVID monitoring period for incoming international travelers. So that lifted travel stocks in particular like Cathay Pacific, the airline, which was higher by about 3% overnight. Finally, in the bond market, as it is an inflation day in the middle of a big week for central banks, we are seeing a little bit of upward pressure on yields. At least that was the case in the Asia Pacific and New Zealand. The 2-year yield up about 5 basis points overnight to 4.67%. Matt.
All right, very interesting stuff. Right now we're looking at gains on futures of just about 0.1%, but you're not going to see really a lot of movement in risk assets until the CPI print comes out. Then you could see a lot of movement in risk assets. In fact, over the past 6 CPI releases, you've seen the S&P 500 move 3% or more in either direction. So you've got a lot of volatility ahead if you are to judge by history. The U.S. 10-year yield right now coming down just about 1 basis point to 360.19, so not a lot of movement there either. There has been a lot of movement in crude. Yesterday at this time, we were looking at a 70 handle for WTI. Today it's 73.66. So since, well, in the past 24 hours at least, we've seen crude go up by about 4% to 73.69 a barrel right now. And then Bitcoin also continuing to gain right now, 17,382 after the arrest of Sam Bankman-Fried. Maybe some in crypto land feel that we can put a pin in that and move forward. So it does look like we continue to increase from the really unbelievable stability that we saw over the last month since the implosion of FTX. Anna, what do you see in Europe?
Yeah, it sort of fell fast and then didn't fall anymore, did it, Matt, on the Bitcoin front? Let's have a look at the European map then, Matt, and it does look like a holding pattern waiting for that CPI print later on today. That is the macro event of the day, and it is what we're waiting for. London is flat, Paris is flat, Frankfurt is up by 0.2%. Speaking of Frankfurt, we just got some German data. The ZEW investor expectations coming in at -23.3. So this is a survey of finance professionals and their expectations for the period ahead. It came in at that minus figure of 23.3. The estimate was -26.4, so maybe at the margin just a little bit less gloomy than had been anticipated. Still a negative reading, still dominated by concerns around energy prices in Europe and the extent of the slowdown and recession that we are seeing in Europe. In terms of where the stock action is today, it is related to this. Brent crude up by 1%, and these are the energy names moving higher as a result. So once again, a day where we see not a great deal of news flow to trade around perhaps here in Europe, but we do have some movement on the oil price, and as a result, energy stocks go higher, up by 0.8%. We've heard from Russia, some Russian media reporting that they think they know what the Kremlin has decided when it comes to the oil cap, and they think that the Kremlin's decision there will be not to trade with countries that have signed up to that oil cap. Some of them don't want to trade in Russian oil anyway, but also not to trade with any country that references any kind of threshold. We'll wait for confirmation from the Kremlin there. The natural gas conversation continues in Brussels. We're waiting for confirmation of what that cap might look like. That conversation, believe it or not, ongoing. The pound is fairly flat, and I put this in because we had seen a bit of a tick higher in the pound earlier, Matt, on the back of some wage data that, if you exclude the pandemic, showed that wages in the UK rose in the month of October at their highest pace in at least 20 years. And so if you're looking for signs that inflation is on the wane, that's not going to be one of them.
No, definitely not. Also, excluding the pandemic, I don't know if we should do that quite yet. Let's get to FTX right now. The co-founder of the exchange is now in custody in the Bahamas. Sam Bankman-Fried was arrested yesterday after the U.S. government filed criminal charges. He'll now await extradition to the U.S. Bloomberg guests weighed in on his arrest yesterday.
Justice seems to be in process, which I think is welcomed by those in the crypto industry. It's actually moved very swiftly. I mean, this is actually all happening in just over a month, so they've definitely moved very quickly.
His arrestment this morning, or today at least in the Bahamas, is actually a sigh of relief for some of the crypto people. As more and more information comes to light, I suspect there is a good chance there'll be more people under the microscope for sure.
Joanna Ossinger, Bloomberg senior crypto reporter, joins us now for the details. So, Joanna, what do we know about, the arrest, the charges, and the timeline for extradition?
Well, Matt, we know he's being held in the Bahamas. We don't know a lot about the charges yet. That's going to come today. Federal prosecutors in Manhattan are planning to unseal the case against him this morning. So, excuse me. And the Securities and Exchange Commission separately has authorized civil charges. So we have these two ways that he is going to be charged, the criminal and the civil. And we'll see what the Bahamas plans to do. Extradition can take time. So we don't know a lot about the map for that yet. We also know, for instance, that the U.S. House will be continuing with its hearing today, even though Sam Bankman-Fried was going to be at that hearing and now is not.
Yeah, Joanna, as you say, we are awaiting the official unsealing of the case. We do have some reporting from the New York Times this morning that the criminal charges against Bankman-Fried included wire fraud conspiracy, securities fraud conspiracy, and money laundering. All of that, according to people familiar with the matter who spoke with the Times. So as we await the unsealing of the case, what else are we watching for with FTX, Joanna?
Yeah, well, Kaylee, there are so many things to watch out for. There's what the House and what the Senate hearing that's scheduled for tomorrow will come up with. So what the legislators are focusing on, it'll be that this case is so complicated and what the different strands of it will reveal. What John Ray, the new CEO, comes up with, he's due to testify at the House hearing today. So it'll be interesting to see what he's come up with, whether he has a decent picture at this point or whether he's still kind of pulling pieces together and trying to figure things out. So there are a lot of pieces to it. And then there's also just the general malaise and the concern within the crypto industry overall. People are still pretty shell-shocked by this whole thing a month later. I mean, FTX was just such a big deal. And now it's imploded, and there are still a lot of people who are really coming to terms with it. And there's a lot of nervousness about if FTX could do this, what else could happen. So there are occasional rumors that still surface where people will say, "Oh, well, what about this? What about that?" So the industry is still very much on edge, and that will take a while to resolve.
Okay, an industry on edge. Bloomberg's Joanna Ossinger, thank you very much. For more on Sam Bankman-Fried's arrest and the FTX hearings, join Matt and Kaylee today on Bloomberg Crypto at 1 p.m. New York time, 6 p.m. in London. Certainly a lot to talk about. So that might be the fascinating water cooler conversation of the day. The market's focus is going to be on the U.S. inflation data. Investors are waiting for that. It could shape the outlook for the Fed and its interest rate hikes into next year. The Consumer Price Index data is out at 8:30 a.m. New York time and is expected to show inflation moderating. Joining us now with analysis, Valerie Teitel, our markets reporter. Valerie, what do we expect?
Hi, Anna. Good morning to you. Yes, so we expect a tick down in the headline on the year-on-year and the month-on-month number, but really the meat of this number really is going to be hitting in the core number, the core year-on-year. Now, we know that Powell in his last Brookings speech, he broke this core component down into three components. That's core goods, that's shelter, and that's core services less shelter. You can see here in my chart, we know that core goods has been deflating like a balloon almost for a year. And we know that shelter, he's kind of dismissed it, saying that this component lags, but the private metric indices of rent have been falling, so he thinks that there's positive work going there. Now, he really focused in on the services X rent component. It contributes nearly 50% to the core CPI. and its trajectory, he noted, is less clear. Now, why does Powell care about this? It's because most of the cost in delivering these services is wages, and we know that the U.S. labor market has been running very tight for quite a while now. Is it finally showing up in core services, ex rents? Is this something that's going to be stickier for longer? Look, Anna, I think this component is really going to lead the discussion whether we see a Fed pause at 5% in March, whether it's at 5.25% in May, or whether it's at 5.5% in June. All of that we'll see in the analysis and the dot plot that they release.
All right, Valerie, thanks very much. Valerie Teitel there running us through what to watch for today, that all-important release coming out in 3 hours and 20 minutes from now. And, of course, we've got wall-to-wall coverage throughout the morning. Now, let's get to some bank news. Bloomberg has learned that Goldman Sachs is cutting hundreds more jobs. The Wall Street Titan is restructuring its struggling consumer business and bracing for an uncertain economy ahead. For more, we're joined by Bloomberg's Charlie Wells. Charlie, walk us through what we know about these cuts. Give us the headlines and the rationale behind them.
Yeah, well, Matt, blame the teddy bear. So that is what a former Goldman executive said he wanted Americans to think about when they thought about Goldman Sachs, and that was some of the reasoning behind pushing into a consumer banking sector, trying to bring out some of these consumer products. That proved to be very expensive. CEO David Solomon earlier this fall said that he was going to back away from those plans, that he was going to reorganize the bank, and this is the follow-up from that. This is as many as 400 jobs being cut in that consumer sector. And we know that Goldman had grown quite a bit over the course of the past 2-3 years. So in the third quarter, their headcount was 49,000. Now that's up 34% from 2018. The bank doesn't break out how many people work in that consumer sector, but we know looking at those numbers, 400 is a lot.
Okay, Charlie. So they wanted to be seen more like a teddy bear and less like a vampire squid, which I think was somebody else's analogy. So are these layoffs then specific to Goldman and they're pushing to retail banking, or is this something broader?
Yeah, Anna, that's a really good question, especially as we see so many questions about the economy ahead. And we know what's unique to Goldman, of course, was that very strong push into consumer banking that really looks like it backfired. But of course, when you look across the street, you do see job cuts, right? Morgan Stanley, we reported last week, cutting 1,600 positions. We heard on Bloomberg TV last week, the CEO of Bank of America talking about a slowdown in hiring because people are not leaving roles. Now, what this all sounds like is that the talent war is over.
All right, Bloomberg's Charlie Wells, thank you so much, as always. Now, from the banks to some other stocks to watch, let's get a look at some movers in pre-market trading in the U.S. this morning. One of them moving higher being Oracle after its results. Its revenue topping expectations, thanks in large part to a strong performance in its Cerner digital health records unit. And analysts are really positive on the revenue growth the company is seeing given the weaker macro environment. So that stock is up about 2.3%. Another group of stocks really moving higher is energy. We are seeing oil prices rising for a second day, so that's giving a lift to some of those names, including Diamondback, EOG, and Occidental Petroleum. Diamondback and EOG each up in the ballpark of 2 to 3%. Oxy's up by about 0.75%. One stock moving lower, though, is Robinhood. This is after a downgrade at Citi, cutting the stock to neutral from buy. The analyst talking about a number of risk factors here, including headline risk with the SEC market structure proposals that could potentially change just a risk-off view in the equity markets overall, and then also risk of fallout from the FTX bankruptcy. So all that together leading to the view over at Citi, and that is dragging on the stock to the tune of about 2% lower before the bell, Anna.
Okay, nervousness for Robinhood investors. Coming up on this program then, Kaylee, we will get back to macro themes. Nina Skero joins us, CEO of the Centre for Economic and Business Research. We'll talk about the UK data we've already had, and importantly, look ahead to US CPI. The UK story fascinating on wages. The US later, we'll talk about services prices and more on the arrest of FTX co-founder Sam Bankman-Fried. We'll get you the latest and more detail. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
It's a big week for the U.S. economy, and Bloomberg's got you covered.
My head's spinning here.
First, CPI data comes in this morning.
We're seeing things work themselves out.
This is going to be a really choppy ride.
Then, tomorrow afternoon, a special surveillance will cover the Fed's last rate decision of the year.
Power of that Fed speak is declining.
Does this Federal Reserve have the commitment to keep going?
The question is, how high do they have to go?
The CPI report this morning and the Fed decision tomorrow afternoon. Right here on Bloomberg, your global business authority.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. We are looking at a CPI number today that could cause some massive swings. In fact, over the last 6 releases, we've seen the S&P rise or fall about 3%. So huge volatility, the likes of which we haven't seen since back in the great financial crisis. Some would say the GFC, but I don't know if we should shorten it to that. In any case, let's bring in Bloomberg Markets reporter Justina Lee right now to talk about what we expect in terms of the reading and the whisper number. Justina Lee, what have you got?
Well, expectations are riding high for the CPI number. Or rather, to be more precise, I mean, economists are still expecting, a rather high number, but at least it would show, slowing increase. And I think markets are really excited about this one after the bond and stock rebound we've seen over the past month or so. And that's already on the back of people expecting the Fed to at least slow monetary tightening at the next meeting. And so if we get a disappointment in the form of, like a higher than expected CPI, I think we could expect the markets to take quite a big hit.
Okay, so we're looking for that core year-on-year number, excluding food and energy, to tick down from 6.3 to 6.1%. These are the numbers that our colleague Valerie Teitel was telling us we should watch out for. And in particular, focus on services, because, the good story seems to have been post-pandemic, not done and dusted, but certainly we've traveled a long way on that one. The services sector, maybe we're still in the throes of that inflationary impulse. Is that what you're going to be watching for?
Right, exactly. And it's kind of interesting because, as I mentioned, people are expecting a slowdown in CPI. But at the same time, as we've seen in the recent economic reports, it's not like we've exactly gotten the all clear just yet,
PPI,
right?
PPI, for example.
Exactly. I mean, we just saw the big market reaction to those sets of numbers. And even before that, I mean, the last jobs report is still showing quite a hot U.S. labor market. And so altogether, I think people are, will be pretty disappointed if we kind of see a further acceleration.
Kaylee.
So, Justina, we talk about the volatility we're seeing off the back of all of this data. And on the subject of volatility, looking at the VIX, which is back up at a 25 handle, that move yesterday in tandem with a 1.4% gain for the S&P 500 was the first time since 1997 when both climbed in sync as much as they did. What should we make of that kind of behavior?
Yeah, I mean, the VIX has been quite a bit of a mystery this year because even when the stock market was falling, the VIX actually stayed, I think, lower than what a lot of investors would have expected. And I think there is sort of a contrarian read on that, in that, in a way, the VIX is a sign that there is more hedging going on. But could there be more hedging going on because there are more people coming back into the market and requiring those hedges? I think that's possibly another interpretation, given that, you know, this returning inflows that we've seen over the past month.
Okay, Justina, thank you very much. Bloomberg's Justina Lee joining us there with market analysis, looking ahead to the CPI data. And for more market analysis, they will be all over that CPI print later on today. MLive is the place to be. The Markets Live blog, MLive Go is the function to use on the Bloomberg terminal. This is Bloomberg.
What's happening on Wall Street?
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. China is warning that it faces a big jump in COVID cases. The country is rapidly dismantling pandemic controls, and it's reopening faster than some experts had anticipated. One of China's top health advisors says if the majority of people become infected within just a few months, there will be a severe strain on the medical system. The European Union has reached a preliminary agreement to send $19 billion in aid to Ukraine. A logjam was broken when Hungary dropped its opposition. In return, the EU agreed to approve Hungary's pandemic-era recovery plan, which gives Budapest more than $6 billion in grants. In the UK, the government is warning of significant disruptions in the National Health Service. Both nurses and ambulance drivers are preparing to go on strike in the run-up to Christmas. Some 600 members of Britain's armed services are now being trained to drive ambulances. Public sector workers, of course, are demanding pay hikes that keep pace with inflation. And Bloomberg has learned that Elon Musk's SpaceX wants to sell insider shares at a price that would raise the company's valuation to about $140 billion. That compares with a valuation of $127 billion in July. SpaceX is the most valuable private company in the U.S., and it dominates the market for commercial space launch. And Matt, of course, SpaceX, a private company, Twitter, now a private company. You also have Boring and Neuralink. All of these enterprises that Elon Musk is at the helm of, and one of them a public company, Tesla, which raises yet again the question of key man risk for that stock, considering he is very, very busy.
Yeah, very busy. And if you look at the value of the public company, it should be noted that it's fallen by half, right? Tesla has lost about $500 billion in market cap over the past year as Elon Musk shifts his focus to Twitter.
Yeah, absolutely. I was just wondering how on earth you go about valuing the opportunities in space as you'd have to do to try and put a value. If it were in the public space, that's what you'd have to do with SpaceX. We don't have that problem, perhaps, with it not being in the public markets. We will come back with a conversation about the macro, focus very much on what's going on in US CPI. That's the data print that really matters later on today. Nina Skero joins us. We'll talk to her, the CEO of the Centre for Economic and Business Research. We'll also recap the UK wages story, which is an interesting cautionary tale for tight labour markets. This is Bloomberg.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. Less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long or persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas. U.S. prosecutors filed criminal charges and will now seek his extradition. Investors waiting for today's U.S. inflation data. The CPI print could shape the outlook for Fed interest rate hikes. More job cuts on the way at Goldman Sachs. Hundreds of positions are likely to be cut from Goldman's money-losing retail banking operations. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. It's really all about the data, Matt. We're waiting for that CPI print a little bit later because, of course, it comes just ahead of the Fed, just after the PPI print, which really did spook markets.
Yeah, absolutely. I mean, we are waiting. A lot of traders tend to sit on their hands in these situations, maybe turn off the algorithms while we look for the release. Right now, S&P futures up about 1/3%. So we're seeing a steady climb there on futures. The 10-year yield, on the other hand, coming down as investors buy bonds as well. So 359.64 is the level there. I'm not sure how important the proximity of the CPI report to the Fed is. I've been thinking about that since I listened to your radio program this morning. But certainly it adds to the volatility of this week, right? And maybe that's why investors are loading up a little bit on debt as well. NYMEX crude up more than 1%, now a 74 handle. 24 hours ago, we were looking at $70 and change for a barrel of West Texas Intermediate. So a lot of volatility in this asset as well. And then Bitcoin has seen very little volatility since the initial plunge after the collapse of FTX. It hung around the $16,000 level. It now is steadily climbing higher, $17,500. Very interesting after the arrest of Sam Bankman-Fried. And of course, we're awaiting those charges to be unsealed today. Kaylee, what do you see in the pre-market movers?
Well, you were just mentioning how oil is about $4 higher than it was about 2 days ago. So that is giving a lift to some of those energy names in pre-market trading. The likes of Occidental Petroleum and Diamondback and Exxon, they are all higher. And the energy select sector SPDR ETF, which really gauges how the sector as a whole is performing in pre-market trading, is higher by about 0.5%. Other stocks on the move up include Oracle. It reported after the bell yesterday, revenue topping expectations thanks to its health records unit. So that stock up about 2.4%. And then you have some of those big Chinese technology companies with U.S. listings moving higher as well. Of course, that follows some gains we saw in Asia overnight. Hong Kong, the incremental reopening news today as they lift some of those COVID monitoring restrictions for incoming international travelers. So that's giving a sentiment lift overall to the likes of JD up about 1.6% and Bilibili higher by about 2.25% before the bell as well, Anna.
We're just getting some news lines coming through from the Financial Stability Report, Kaylee, here in the UK. The Bank of England putting out this this review of stability in the UK economy. The Bank of England calling for urgent action on LDI regulation. You'll remember that this was all to do with the pensions industry in the UK and some of the hedging products that it used, and it was part of the reason why the Bank of England had to step in with a rising gilt yield environment at the end of September post the mini budget. So they're calling for more regulation there. They're also saying that the UK gilt market liquidity remains poor versus the first half of 2022. 4 million UK households will see mortgages rise in 2023, according to the Bank of England. So that's what we have on the financial stability front. Interesting to see if they say anything about crypto. That was something that was very topical last time around. Quick check on where we are on European markets for you then. We have the European equity market session up by 0.5%. Brent crude up by 1.4%, lifting energy stocks, $79 a barrel there. The gas price is in focus because the energy ministers are meeting in Brussels to talk once again about whether they can agree a cap. 275 euros was where the Commission wanted to put it. The member states remain divided on that one. And the pound, 122.87. Actually, we saw a bit of a tick up in the pound on the back of some of the UK data we got earlier on today. And that's where we go next in our conversation. UK wages accelerated in the 3 months to October at a record level, but still fell short of double-digit inflation. Joining us now is Nina Skero, CEO of the Centre for Economic and Business Research. Nina, very nice to have you on set with me here in London. And let me ask you about what the wage story in the UK, because it matters in the UK, matters for the Bank of England, but it's also going to matter if you're looking at tight labour markets in other places perhaps. Wages proving pretty stubborn. If you're looking for reasons to be nervous about inflation here in the UK, that it still hasn't topped out, then you can certainly look at that wage data today. Did it worry you?
That aspect of the release a little bit, but I do think there was another finding in this morning's labor market release, which is on the activity rates, and that people are very slowly, but at least there is some initial trend of people going back into the labor market from the ones that have dropped out during the pandemic. And I do think in the longer term that could have the opposite impact on inflation, because I do think that's going to be something that we're really going to need if we're going to see wage rises normalize. We're going to need to see more workers coming back and basically starting to fill some of the vacancies and create more competition in the labor market.
Yeah, absolutely fascinating to see here in the UK and in the US what keeps labour on the sidelines with inflation at these elevated levels, Nina. And I know a lot of labour market economists have been writing about that of late. What about where this leaves the Bank of England? It doesn't sound as if your thinking is all that moved by this data set this morning on the UK labour market. And we do face the possibility of a four-way split then at the Bank of England. Some people calling for no change, some 25 basis points, some 50, some 75. What are you expecting come Thursday?
Inflation is still quite high, but the Bank of England has been very clear that it's really worried about the economic outlook, and in fact on labor market, on the extent of the upcoming recession. It's been significantly gloomier than a lot of private sector forecasters. So I think they're going to do the least they can get away with. In a sense, there's still a need to act to control inflation. I think 75 basis points would be, in their judgment, be too much, 25 would be too little. I do think there's going to be some consensus around that middle ground of a 50 basis points hike later this week.
How transitory, Nina, do you expect energy inflation to be? Are we still going to be worried about gas prices next winter?
I expect that we are, and we're not expecting the situation to normalize into 2024 in terms of energy prices. It is hugely dependent on what we see on the policy side in terms of impacting the effect that has on the actual sort of how households feel the level of those rising energy prices. We've seen from the newish chancellor that the support he's planning on extending isn't going to be as long as was previously announced. So there's still, I think energy prices are going to be elevated well into 2023 and in fact into 2024. But in terms of how that impacts inflation, how that impacts household spending, there's still more to be seen in terms of what comes of the support packages.
Yeah, I was thinking about how economists react to price caps, generally, but even more specifically when it comes to gas. Is it a concern for you? The unintended consequences. Typically, at least historically, price caps haven't worked out terribly well.
It does break down that mechanism of basically prices are going up, and then that's signaling to households that there is a need to save energy and to alter your behaviors. I think the argument here is that price rises are so severe that that's a risk that the government is willing to take, and that signaling mechanism is still there, given that even with the price cap, households are seeing much higher prices than they were this time a year ago. So although that mechanism has been weakened by the price cap, it hasn't been eliminated.
Nina, if we could shift our focus to here where I am in the U.S., obviously inflation data is coming up less than 3 hours from now. How could the data today change the outcome of the Fed decision tomorrow, if not the actual size of the Fed's last hike of the year, what the dot plot could look like?
I think it would take quite a big surprise for the Fed to change its trajectory now. They've very much sort of talked themselves into, I think, a 50 basis points hike. So even if we don't see inflation reach that 7.3 level, which I think I would agree with the consensus on this occasion, I think as long as we're seeing any side of inflationary pressure starting to moderate, we're going to see sort of a 50 basis points hike at the next meeting. There is more of a chance of a change trajectory for early 2023. At the moment, we're expecting rates to rise to 5% and then not really beyond that. If we don't see inflation tick down as much as expected, that could rise to 5.25, 5.5, and then also extend the trajectory before the Fed actually starts cutting. But I think in terms of this next meeting, the situation seems pretty set.
Okay, so it's going to be 50 basis points tomorrow, essentially, is what you're saying. It is now a question of how high they ultimately go and for how long they stay there. Nina, in your assessment now, having not seen today's data yet, do you expect them to start cutting in 2023?
If they do start cutting in 2023, I would expect it to be the very, very back end of 2023. We do actually expect rates at 5% throughout all of next year, because we have seen some sort of a little bit mixed data from the US. We've sort of seen that PPI has not really taken the direction that many were expecting it just a few days ago. And also the economy seems to be actually faring somewhat well given the extent of tightening we've seen so far. So there also isn't that incentive to sort of rush in and try supporting growth, which seems to be actually responding relatively well. I mean, the sentiment is holding up. The situation, doesn't seem to be deteriorating as much on the back of the monetary tightening.
Nina, I just want to ask you about the vulnerabilities around the housing market. I was just looking at the details coming through on the financial stability report from the Bank of England. I mentioned some of them around LDI, concern there, and concern about a lack of liquidity in gilt markets in some places. They've given us a bit of size and scope on the impact of the UK mortgage market of the higher rates. Within 3 years, they say 70% of mortgage holders will see their payments increase. And we know that the UK labour market is very vulnerable because of variable interest rates, or at least very short windows of fixed rates being quite typical. Other housing markets are more protected from these things, like the US and maybe other parts of the world. Your thoughts on the housing sector and vulnerabilities there?
I think that is definitely a big thing that the Bank of England is keeping in mind, because as you say, they need to keep it in mind to a greater extent what their decision is going to mean for the mortgage markets than in other countries. And ultimately, when they have to make these trade-offs in terms of the level of the pound, in terms of what their rates are going to mean for people paying mortgages, they do put more weight on the housing market, because ultimately if they have to make this call between crashing the housing market or weakening the pound and seeing inflation soar, they do tend to sort of steer away from having too much of an upside shock in the rates, specifically because so few people have fixed mortgages beyond the 2-year period.
Okay, Nina, thanks very much. Thanks for your thoughts this morning. Nina Scarrow, CEO of the Centre for Economic and Business Research here in the UK. Now, coming up on the programme, FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas, as we have been discussing. We will get you all of the latest, what we know and what we're waiting to find out later on today. This is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if we're being honest, this is a plant that cannot hold on much longer in a changing climate.
The secret of success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. How do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
His arrestment this morning, or today at least in the Bahamas, is actually a sigh of relief for some of the crypto people. It's going to be good for the industry because we need to flush out the bad actors. We really need regulation and to show that rule of law is important.
Bobby Lee there, founder and CEO of Ballet Crypto, speaking with Bloomberg on the arrest of FTX co-founder Sam Bankman-Fried in the Bahamas. Bankman-Fried's arrest comes after weeks of speculation that FTX's client funds were misused before the crypto exchange collapsed. Shonali Basak, our global finance correspondent, joins us now in Washington, D.C., where she'll be covering the FTX hearings. At this point, it looks like, Shonali, without SBF.
We do have FTX CEO John Ray slated to speak today at the House committee. And remember, as we know, SBF himself, Sam Bankman-Fried, was slated to speak virtually this afternoon. We know that Maxine Waters, the chairman of the committee, had said also that him not being there might not allow a lot of consumers here to get the information they would have gotten if he were to testify under oath. But with that said, we will get a lot more information today as well, Matt. We are waiting for the unsealing of an indictment from the Southern District of New York. It's something that we have said that we would be expecting, according to Damian Williams, U.S. Attorney here. We also know that the SEC has its own civil case as well, and so authorities themselves may provide more information. And as we know, the testimony of the new CEO, John Ray, has also indicated that there are certain things that FTX had done, particularly the commingling here of funds, that they had alleged here in not just the bankruptcy filings, but also in the testimony that we expect him to give today to the House. Well, and also the lawyers here in the U.S. are claiming that the Bahamas had asked Sam Bankman-Fried to mint new coins before he was blocked from FTX systems. Shonali, what do you make of that story and the idea that he perhaps minted millions of dollars worth of digital coins and then transferred those tokens to control of island officials?
I think it's an interesting question here because we know that the Bahamas here is working on an extradition treaty. We know that they have arrested him last night, according to the Royal Bahamas Police, but they also said in their statement here that they are going to continue its own regulatory and criminal investigations when it comes to Sam Bankman-Fried. So we know there's a few things going on here at the same time. We knew earlier in this bankruptcy process there was some concerns about jurisdiction, but now as the U.S. is filing criminal charges here, and according to the New York Times, that includes wire fraud, it includes conspiracy of wire fraud. So we know here that there is some sense of the two nations really working together when it comes to Sam Bankman-Fried, but the Bahamas itself, especially in light of that story, Kaylee, is still pursuing its own investigations.
Yeah, that's going to be an interesting one. We'll wonder if we'll get more details from John J. Ray when he speaks later where you are, Shonali. So we won't hear from Sam Bankman-Fried, but we have at Bloomberg seen a copy of what he was planning to say, and he was planning to use in fairly colourful language, well, to say in pretty colourful language that he messed up, but more colourful than that. And we know that he has said previously that he's admitted major managerial missteps, but said he never tried to commit fraud or to break the law. These are the things he's already said in the media. So I guess we had some sense of the type of arguments that he might have used had he been about to testify where you are.
There was a lot of blame given here in that testimony that, again, is not posted on the website. It was obtained by Bloomberg. There was a lot of blame here to the Chapter 11 committees and the folks who have taken over after him for locking him out of the data that would have been necessary to give a fuller account, according to the testimony obtained by Bloomberg. Now, I would also say he did have a lot of media appearances as early as hours before he was arrested. He had appeared on a Twitter Spaces yesterday where he was asked about the timelines that FTX had undergone and the tweets, the deleted tweets that were taken down that explained about the details here about holding customer assets one-to-one and what else went down in those final days in November before the bankruptcy filing had pursued. Now, he did say yes, but to a lot of things. And so a lot of explanation that we did not get as to how those final days really had unlocked itself. And remember, he's blaming it now on the idea that he just doesn't have the data anymore as required to give a fuller account because now FTX has
someone had to know, right, Shonali? And the interesting thing is, at least according to the New York Times, the criminal charges include wire fraud, conspiracy, securities fraud, conspiracy, and yet The indictment, according to the NYT, only one person is charged. Are we waiting for other names to come out?
I think that's the red herring here. That's the million-dollar question about whether he acted alone or who else had acted with him here as they allegedly had commingled funds. We will see. Remember, there was that Australian Financial Review story yesterday that had talked about kind of this set of secret messages that was among Sam Bankman-Fried and his top deputies, where I believe the name of the chat on Signal here was wire fraud. And he did deny that report publicly. It is actually his last tweet prior to the arrest. And so I don't expect that he will be able to tweet as publicly from now on, but he did deny that report, but that certainly is out there.
Shonali, at the end of the day, all of this is backward looking, right? We're trying to figure out what happened in the past. For the rest of the industry, it's a question of the future. And to bring it back to the hearings that you will attend today, how much do we expect lawmakers to focus on the future and regulating and legislating this industry as we look forward?
A lot. Remember, this is giving lawmakers a set of a roadmap here as to what could or should have been done to protect consumers at the end of the day. That is what they're most worried about. This is all in the overlay of what happens in the United States in terms of tokenization of some of these assets. Are they considered securities if you are looking at tokens? There's a lot of fear here when it comes to how the SEC might handle those assets. The CFTC as well, that's a big question when it comes to the Agriculture Committee and how they look at some of these assets as potential commodities or the futures that are tied to these assets and whether they require more regulation, given that the FTX entities here in the United States were largely regulated by the CFTC. Now, there's that, but then remember, there's also the Senate committee tomorrow, guys, where you'll hear from Kevin O'Leary, who is a paid spokesman for FTX, as well as more academics tied to the industry. So there's going to be a sense of what did they see and what didn't they see and how the practices of the industry should change from here.
All right, Bloomberg's Shonali Basak reporting from Washington. Looking forward to your coverage throughout the day. Thank you so much. And of course, we will have more on Sam Bankman-Fried's arrest and the outcome of those hearings on FTX. Join us today on Bloomberg Crypto at 1 p.m. New York time, 6 p.m. in London for a full breakdown. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. We're almost wrapped up here for the hour, but let's take a look at what's coming up for the rest of the day. France is hosting a Ukraine donors conference in Paris, where we'll hear from President Macron and Zelensky later on. At the top of the next hour, Bank of England Governor Andrew Bailey will be giving a briefing on the latest financial stability report. Then the big data event, 8:30 a.m. Eastern, will get U.S. CPI data. Evidence of disinflation in the headline and core print should continue to build in November. At least that's what the markets and the Federal Reserve are hoping for. And then finally, the House hearing on the collapse of FTX starts at 10 a.m. Eastern. Sam Bankman-Fried, of course, was arrested in the Bahamas yesterday. We'll have full coverage of that on Bloomberg Crypto later today, Matt. But while we will definitely have our eyes on Capitol Hill and on that hearing, the broader markets are going to be waiting for that CPI number.
Yeah, absolutely. The CPI number is crucial to markets, and the Sam Bankman-Fried arrest and the hearing that we get on Capitol Hill is maybe just more interesting in terms of finding out what exactly happened. It'll be great if we get some regulatory guidance from Congress and the Senate. So I guess that's what we're really waiting for in terms of news that matters, Anna.
Yeah, absolutely. And the unsealing of the charges against Sam Bankman-Fried, we'll wait for that. We'll get that early U.S. hours, we understand, so that'll come fairly soon. That is it for Early Edition. Surveillance is ahead. They'll, of course, be building their way towards that CPI print, bringing you all of the data when it lands. This is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist. And I think we are witnessing right now a societal change in the way we work. You're no longer going to measure productivity in the same way as in the past. You're going to be focusing on output. Never mind what people do in their private times. It doesn't really matter to a company as long as the output is there.
HPE launched its Edge to Office hybrid work initiative in the fall of 2020. The new campus is designed with that flexible model in mind.
Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, today on Bloomberg.
think 2023 is opening the door for a recession.
We're expecting either slow growth or a mild recession.
There's a lot more signs now of a pretty clear inflection point in both the growth and the inflation numbers.
What we've had is the flop. We're still kind of waiting for the chop.
You got to concentrate on, I think surviving the difficult start to next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
26 is not cold.
It's not cold.
That is -3 centigrade. By definition, that is freezing.
It's not cold.
Get the right gear.
From New York City this morning,
so
a
British.
freezing New York City.
It's not freezing. It's
Just wear a sweater.
By definition, it is freezing. Good morning, good morning. It is CPI Tuesday. Can we agree on that? The data coming out a little bit later this morning.
And very nuanced. This is not normal. This is a really nuanced report at 8:30.
Going into the Federal Reserve tomorrow, Tom, the week ahead is a pretty big one.
I frankly wonder if this is more interesting than the Fed meeting. Last time I was wrong on that. The Fed meeting last time was wrong. But
it's going to set the tone for that news conference.
This is not, folks, another inflation. It's not CPI Tuesday and all that. It's serious. It could be JP Morgan with that publication of an equity pop if you get under 7%.
Well, that's if you get a severe downside surprise on CPI. And no one's looking for anything sub 7% a little bit later this morning, Lisa.
I'm just thinking about it's not CPI Tuesday. It's CPI Tuesday. We're actually going to enjoy it today. I mean, honestly, I'm curious to see if you look under the headline number services inflation versus goods inflation and how that gasoline price really weighs in, given that gas prices are the lowest since October 2021.
Are you on the phone
I'm on with my stablecoin people.
Oh, right.
I'm trying to find out if my stablecoin, is it still stable? It's still stable.
It's still stable. Do you want to talk about the arrest of Sam Bankman-Fried?
No, we'll talk about this later, but I want to move the story forward. We're going to do that with Sonali Basak.
Sonali's going to join us down in Washington alongside Anne-Marie. We've still got a hearing that's going to come at 10 a.m. Eastern Time.
I'm moving forward from that.
Maxine Waters.
I'm looking at Binance. I'm learning about Binance as fast as I can. I really don't know that all much about it, but this is serious stuff. We're now at the point where it's the legal dash.
Why are you focused on that this morning and not Sam Bankman-Fried?
Because this is the next thing to fall, and they're way bigger, and it's way more international. This was one guy.
We're going to get the actual complaint. The indictment will be unveiled today.
And
I will understand what the allegations are and how broad it will be. The focus very much still on the treatment of him, where the allegations of malfeasance really are. That will color the whole discussion for the broader industry.
He's not worried about the inflation report. I'm moving on again to Binance, John. I think it's way serious. There's percolating. Reuters with an important article about a Department of Justice divided inside about what to do with Binance. But what intrigues me is this idea of stablecoin, which is the same debate as a money market fund years ago. Do you break the buck was the question. Do you break the value of a stablecoin? To me is the heart of the matter.
Just to be clear here, you mentioned the Reuters story. That's about the risk of criminal charges over breaking money laundering rules, correct?
Yeah, and there's a debate within Department of Justice, but all of a sudden things are getting sped up. That's my number one question to Sonali.
Let's whip through the price action. We'll catch up with Sonali in about 10 minutes' time. Equity futures are positive by 0.4% on the S&P 500. It's CPI data coming in about a couple of hours and 30 minutes, 2 hours and 30 minutes away. Looking at the bond market, yields just a little bit lower by 2 basis points on a 10-year, 358.91. Tom, a whole lot lower since the Fed last met on both the 2-year and on the 10-year as well.
Big pop yesterday afternoon, and, a correlation there. The real yield, John, is sort of like where it is how I'd put it, and inversion didn't do much. But equity markets moved, and as you mentioned, they move again up 4 or 0.5%. On the inflation front, and we'll get to this through the entire show, Dominic Constant with my smartest note this morning, and he made it very clear service sector inflation is going to be tough to tackle.
Dollar a whole lot weaker since the Fed last met as well. You wonder if that breathes some life back into the inflation story. Bramo, euro dollar this morning, basically unchanged at about 105.
Hard to get some direction ahead of this report. 8:30 a.m. is the key data point of the day. CPI year over year. If it comes in at 6.9%, then you could see a 10% pop in the S&P 500. That was JP Morgan's prognostication, the idea of a severe downside surprise. I think that, Tom, your point about services side inflation is the key one. How much do you see that continuing to percolate up and offset some of the goods disinflation that we see? That is definitely what the Fed has said that they have been looking at. Today, we will also be awaiting that 10 a.m. hearing in the U.S. House of Representatives. We're saying Sam Bankman-Fried will not be attending because he is currently being held in a Bahama court and going to be indicted in U.S. Federal prosecutors coming out with that indictment later this morning, unveiling the charges. He will be extradited to the U.S. What do we get in terms of what the problems were here? How do they cast this? That's why I really am curious about that indictment. At 1 p.m., the U.S. Treasury will sell $18 billion of 30-year notes, and it is worth, Tom, waking up before the 2 p.m. game that you will go and wake up for. Because honestly, yesterday's 10-year auction was terrible. John, by some metrics, it was the worst since 2009.
Why?
Because the rally has left a lot of people wondering whether there still is value. It came in, people demanded yields that were the most relative to where it was trading pre-auction going back to 2009. And it raises questions about whether perhaps this rally has gone too far too fast.
John, how do you respond to a more retail analysis that says the 10-year yield is 3.60%? And inflation's whatever it is, 6, 7, 8%. That's a massively negative inflation-adjusted 10-year yield, not like the real yield that we talk about day to day.
So next week, or rather tomorrow, we're going to get a dot plot from the Federal Reserve, and it could show a terminal rate climb to as high as 5.25. What you're doing by looking at a 10-year at about 3.60 is suggesting that we've got rate cuts in our future, and inflation's going to be a whole lot lower, and growth as well, Tom. That's ultimately what you're doing here. And ultimately, also, you're making the call that maybe yields go lower from here, which I think is what a lot of people are lining up to say coming into this week and going into the new year.
And certainly based on the last, I mean, the market to me was two parts. It was before 2 p.m. yesterday and after. And clearly yesterday's lift in the market was to get out front of 8:30 this morning.
I don't think it's unusual to have a sloppy auction going into a lot of event risk.
I agree.
CPI this morning, Federal Reserve tomorrow. Ibrahim Ratbari joins us now, Global Head of FX Analysis at Citi. Ibrahim, if we can just begin with a CPI report a little bit later this morning. Can you run us through what you and the team are looking for?
Yeah, great to be with you. And we do think this is a really interesting CPI report. It's going to determine the narrative. We had a low report last month, but this year we never got two soft readings in a row. So if we get the consensus expectation, which is also Citi's, of a 0.3% month-to-month increase in CPI, then I think this idea that inflation is peaking out and is more or less on track for the Fed will gain a lot more traction, and that would weigh on yields, would weigh on the dollar, and probably support broader risk appetite. For choice, I think the risk is a little bit to the upside. Again, the house call is just in line with the consensus forecast of 0.3, but I think it's between 0.3 and 4 or 5. And that is mostly because we did get some very large and probably noisy declines last month, and there might be a little bit of retracement.
After the big figure fun of 2022, are you enthusiastically positioning for big figure moves next year? Or are you just trying to get to, say, January 31st as a working number?
I have a lot of sympathy with the idea of getting to January 1st and then maybe even beyond the first month. So we're looking at 2023 as a big transition year, and particularly for the dollar. We think we're transitioning from the most dollar supportive regime, a lot of safe haven demand, no other safe havens, and the US was outperforming, to probably something closer to the opposite. Maybe very late in the year, bottoming global growth, bottoming equity markets, and if yields are peaking, plenty of other safe havens. But where exactly that transition takes place during the year, I think is very hard to call. And just as Lisa said earlier, we do have a lot of sympathy with the idea that that rally in fixed income that we've seen over the last 2 months has gone a little bit too far. So we see upside risk in rates and the dollar into the year, early in the year. But that's not going to be as durable as it was this year.
Ibrahim, how much conviction do you have around that in order to perhaps lean against the narrative if this comes in as a softer CPI? In other words, basically say the underlying factors are still there to cause inflation to be persistent and more so than the market is currently pricing in.
Well, we have learned over the last couple of months that you really have to take each trading day as it is, and these moves can be so large, even on a daily basis, that you can't stand in their way or ignore them. So if the number comes in low, we are pretty confident that the market reaction is going to be significant, not nearly as significant as last month, both because it's the second soft number and because we have the FOMC tomorrow. Nevertheless, certainly if the number is low, we wouldn't be buying dollars on the day, and we would be cautious going into tomorrow and the rest of the year. So you have to be tactical. And the price action yesterday did show us that investors, generally speaking, are still minded towards selling dollar rallies. and maybe buying many of the other assets, both fixed income and in equities.
For 2023, how much are you looking at global housing markets and the differentials there in order to determine what your call is?
So we think housing is a very big topic, and in three ways. Number one, we think overall it underscores the idea that we're drifting into global recession. So we have fairly synchronized housing market weakness coming in. Number two, we do have significant deterioration, significant differentiation, because there are many economies where that have much larger housing vulnerabilities, where the share of floating rate mortgages is higher, house prices have risen more, household debt is higher. In G10, that includes Australia, Canada, New Zealand, Sweden, Norway, but also perhaps the UK versus, let's say, the US, many countries in the Eurozone or Japan. So we do think there's differentiation that will be reflected in relative value in exchange rates. And then number three, the big elephant in the room for 2023 is what happens to China, and there also what happens to the real estate market. If that has some signs of life, then that's a major topic for markets, but it's also a major topic for the dollar, because stronger Chinese growth, generally speaking, is associated with a much weaker dollar. So we think housing is a really big story for 2023, really across markets.
Ibrahim, wonderful to catch up with you. You're not alone thinking that. It seems that every single FX strategist we speak to right now is talking about housing in respective geographies. Ibrahim Rakbari there of Citi. The latest from the SEC. Lisa, just reading this one through, as you are as well, charging Samuel Bankman-Fried with defrauding investors.
Yeah, and this comes alongside, we're expecting to hear from the U.S. federal prosecutors in the Southern District of New York to come out later today with their indictment unveiling that, how much this really raises questions about the broader implications. What he basically is saying, that he promoted FTX as a safe, responsible crypto asset trading platform, especially touting its sophisticated automated risk measures to protect customer assets, perhaps overstating risk protection.
Gary Gensler, SBF built, quote, a house of cards.
Here's the quote. The Securities and Exchange Commission today charged Samuel Bankman-Fried with orchestrating a scheme to defraud equity investors in FTX Trading, the crypto trading platform of which he was the CEO and co-founder. Investigations as to other securities law violations and into other entities and persons relating to the alleged misconduct are ongoing. Much more on that coming up next. We're going to catch up with Sonali Basak down in Washington, D.C. alongside Bloomberg's Anne-Marie, live from New York. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Disgraced FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas after U.S. filed criminal charges. The Bahamian government says Bankman-Fried is being held pending an extradition process. Now, that arrest comes after weeks of speculation that FTX's client funds were misused before the crypto exchange collapsed. Investors are awaiting U.S. inflation data that could shape the outlook for Fed interest rate hikes into next year. The Consumer Price Index is out at 8:30 New York time. A subdued CPI number would justify the Federal Reserve's projected half-point interest rate hike on Wednesday. Bloomberg's learned that China is delaying a closely watched economic policy meeting this week. That's because of a surge in COVID infections in Beijing. No word when that meeting will be rescheduled. China has warned it faces a big jump in the number of COVID cases after scrapping most testing and isolation of infected patients. Elon Musk's SpaceX is offering to sell insider shares at a price that would raise the company's valuation to about $140 billion. Sources tell Bloomberg the shares are being presented for $77 apiece. SpaceX was valued at $127 billion in July, according to data provider PitchBook. No word on whether the company will look to raise capital in a primary funding round. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. It's a big week for the U.S. economy, and Bloomberg's got you covered.
My head's spinning here.
First, CPI data comes in this morning.
We're seeing things work themselves out.
This is going to be a really choppy ride.
Then, tomorrow afternoon, a special surveillance will cover the Fed's last rate decision of the year.
Power of that Fed speak is declining.
Does this Federal Reserve have the commitment to keep going?
The question is, how high do they have to go?
The CPI report this morning and the Fed decision tomorrow afternoon. Right here on Bloomberg, your global business authority.
Breaking just moments ago, the SEC with this quote from the SEC chair, Gary Gensler. We allege that Sam Bankman-Fried built a house of cards on a foundation of deception while telling investors that it was one of the safest buildings in crypto. There's an even stronger quote a little bit later in the statement released by the director of the SEC's Division on Enforcement, who said the following: FTX operated behind a veneer of legitimacy, Tom. Mr. Bankman-Fried created by, among other things, touting its best-in-class controls, including a proprietary risk engine and FTX's adherence to specific investor protection principles and detailed terms of services. But as we allege in our complaint, that veneer wasn't just thin, it was fraudulent. The SEC, just moments ago.
It is typical SEC, John, and, not to play lawyer here, but I'd go to paragraph 2, item 3, which I think is the heart of the matter, and is the heart of the matter forward for the industry, including Binance. Item 3, undisclosed risks stemming from FTX's exposure to Mr. Bankman-Fried's Alameda significant holdings of, John, overvalued illiquid assets such as FTX-affiliated tokens. To me, that's the heart of the matter. It's this discussion of tokens, and I go back to Bank of International settlements in Geneva. It's like Butch Cassidy and the Sundance Kid. Who are these tokens? Do we know? I don't think we know.
A lot of people have been asking, where are the authorities, Tom? Unlike Madoff admitted to fraud. Straight out the gate, basically, which allowed authorities to clamp down on him pretty quickly. These guys have clearly been putting a case together, at least at a headline that's just come through in just the last couple of minutes for those who are just tuning in. Samuel Bankman-Fried, charged with defrauding investors by the SEC.
What took so long, right, is perhaps the implication, because there was a lot of questions as Sam Bankman-Fried paraded around with a series of interviews and public relations and talking about how, yeah, he messed up, or stronger words, but he had good intentions. What I thought was interesting about this release, FTX's collapse highlights the very real risks that unregistered crypto asset trading platforms can pose for investors and customers alike. That goes to your point, Tom.
Let's get to this, and this will be through the morning as we look at inflation here in 2 hours, but also these events to 10 a.m. this morning. We'll have much more on this on Bloomberg Television and radio. Shonali Basak and Anne-Marie Horton in Washington. Shonali, you look through this statement. It's widely expected, but there's always a surprise. Shonali, what is the surprise in Mr. Gensler's statement?
We're looking at what the SEC is doing, and remember, we have now a charge to the scheme to defraud investors. Remember, we are expecting also the Southern District of New York to also unseal an indictment later today. According to the New York Times, what that will include is charges of wire fraud, securities fraud, conspiracy of both, as well as money laundering. And so the scope of which this scheme had unraveled relative to what we know Sam Bankman-Fried said himself, which is that he didn't know knowingly commit fraud or he didn't knowingly commingle assets. There's a lot of detail. I just started looking through the SEC complaint that shows that he was responsible here for what happened at Alameda, and the U.S. authorities finally, weeks later, are taking note.
Chanel, an unfair question, but things are moving so quickly with the Reuters report last night of discussion at the Department of Justice and debate over Binance. Let's keep it as simple as that. How is the rest of the industry going to watch these hearings today and the news flow out of the Bahamas and legal authorities in the United States?
There are a few things, Tom. One is a very simple discussion about how the SEC treats tokens. Do they treat them as securities? And remember, there's a lot of anxiety here in the venture world about this because there has been so much fundraising through tokenization in recent years. There's also this issue of how these assets are promoted. Remember, there's the House hearing today, but there's also the Senate hearing tomorrow regarding FTX. One of the speakers being Mr. Wonderful, Kevin O'Leary, who is paid by FTX as a sponsor here. The other thing here, remember, to your point that you're making about Binance, these investigations have been going on a very long time, years actually. But over the last 24 hours, according to a report here by Nansen, data by Nansen, Binance has endured outflows as well as facing some issues here regarding withdrawals of stablecoins. Now, we don't know what kind of alarm there is in that scenario yet, but it's something to keep your eye on here as the industry really faces pressure. You do have CZ, the head of Binance, saying that these are one-to-one conversions, no margin or leverage involved, and they're trying to establish fluid swap channels in the future. But he said to feel free to withdraw any other stablecoins, whether it's BUSD, USDT, etc. And so it's unclear what kind of pressure there is on the industry, but that is a situation, to your point, to watch.
There's a political aspect here, not only because of the hearings, Anne-Marie, but also because in this SEC complaint, there are allegations that Bankman-Fried used commingled FTX funds to make undisclosed venture investments, lavish real estate purchases, and large political donations. This has come under a huge focus because he has been a huge donor politically. How does that color some of the hearings that we're going to be seeing today and tomorrow in Washington, D.C.?
Well, he's not going to be showing up to the hearings, right? We do know that he was going to open up with a pretty blanket and direct statement saying that he messed up, but using a different, more explicitive word for that. What we should look back when it comes to how Washington has treated this individual, and he's talked about this, saying, you know, maybe if I give some more money to some lawmakers, they're a little bit more quick to pick up the phone and speak to me. Open Secrets has tallied it, and when it came to the 2022 midterm election cycle, for the Democrats, he was donor number 2 after George Soros. I had mentioned this yesterday because this was millions of dollars to the Democratic Party. And a few individuals were saying that's not fair. He also gave to Republicans. That is true. He did give to both sides of the aisle, but it was millions to Democrats and it was thousands to Republicans. And I think what you've seen with this individual, and we've talked about this on this show, is that whether it was the media, whether it was celebrities, whether it was lawmakers, there was a little bit more of a put the gloves on approach to this person. Everyone wanted him to succeed. At this point, he didn't. And it also raises question about who would be a mega donor in the next election cycle, because he was up there.
And Marie, how much focus is there on trying to crack down now, perhaps compensate for the lack of focus, perhaps the lack of protection that we have seen over the past recent months?
Well, when I'm looking through the SEC statement this morning, there's one thing that stands out to me. It's that FTX collapse highlights the very real risk that unregistered crypto asset trading platforms can pose for investors and customers alike. So maybe they're going to get a little bit more serious and double down on some of these trading platforms and this industry. But I also think about what Senator Tester from Montana, a Democrat, said over the weekend on NBC on the Sunday shows. I want to read you this. I knew you guys were going to ask me regulation. He says, I've not been able to find anybody who's been able to explain to me what's there other than synthetics, which means nothing. The problem is if we regulated it, it may give it the ability of people to think it's real. People in Washington don't even think they should regulate it because they don't even want to give the message to investors that you should be in this space.
AMH, thank you. Schnally, I want to squeeze this in. What do you make of the timing of this? That this is all taking place, that authorities are stepping in right before Congresswoman Maxine Waters has her big day of testimony on Capitol Hill?
It's interesting. I was taking a quick look here at all the people on this committee alone, by the way, that took money from SBF. It's a super awkward situation, absolutely. And you wonder if they're going to be giving any of that money back. So to their point, I think that whether you're a lawmaker or a regulator here, you have to wonder how this had happened under their watch, especially with the closeness that the lawmakers had to this industry. But to the point that you're making here, Maxine Waters herself said that it's time that the Sam Bankman-Fried had faced the process for justice, but the American public also deserves to hear from him directly under oath.
Shanali Basak, AMH, to the both of you, thank you. TK, what do you make of that? Coincidence that this has all taken place in the last 12 hours?
No, I think your question was dead on. You were ruder than me. I was thinking the same thing. I don't think it's, I think it's a catalyst to get to it before the hearings here because they must know things we don't know. I'm going to do a victory lap here for Lisa Abramowitz, Jonathan Farrow, and myself. Our quiet nailed this over the last 3 years. I'm not going to mince words.
Is that your
every day, you and me, Lisa had to take the surveillance pencil and put it in our mouth so we would grit our teeth.
Future's positive this morning. Much more on this breaking story. Still ahead.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon. Can ESA help humanity take its next giant leap?
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
2 hours away from inflation data in America, about 24 hours away from hearing from the Federal Reserve Chair, Jake Powell. Equity futures going into all of that, shaping up as follows. Futures positive 0.5%, a lift here on the NASDAQ by 0.5% also. The move on the S&P yesterday, biggest daily move of the month so far on the S&P 500. In the bond market, yields look like this on 2s, 10s, 30s. Yields just a little bit lower by a couple of basis points on a 10-year to 359.27, down by 3 on a 30-year to 354. So this curve just a little bit flatter going into that Fed call tomorrow and CPI later this morning. To finish on euro dollar, just to round things out for you, euro dollar looks a little something like this, 105.45. Positive 0.8%. That's the price action. Let's get you the breaking news of the last 30 minutes or so. The SEC charging Samuel Bankman-Fried with defrauding investors. They say Bankman-Fried orchestrated a years-long fraud to conceal from FTX's investors, one, the undisclosed diversion of FTX customer funds to Alameda Research, the undisclosed special treatment afforded to Alameda on the FTX platform, including providing Alameda with a virtually unlimited line of credit funded by the platform's customers, and exempting Alameda from certain key FTX risk mitigation measures. And finally, 3, and Tom, you picked up on this a little bit earlier this morning, undisclosed risk stemming from FTX's exposure to Alameda's significant holdings of overvalued illiquid assets, such as FTX-affiliated tokens. The complaint further alleges that Bankman-Fried used commingled FTX customer funds at Alameda to make undisclosed venture investments, lavish real estate purchases, and, Tom, large political donations.
Which goes to the events this morning at 10 o'clock. I assume staffs of these politicians are rewriting the script this morning. I really want to say, John, that the token discussion at item 3 goes to the heart of the research of Raphael Auer and his team at the Bank of International Settlements. BIS is hugely suspect about stablecoin and its supposed stability within an open, visible, audited market.
As we were reading through the statement, Tom, you went straight to that quote from Gary Gensler, so allow me to share that quote with our audience again. The SEC Chair, Gary Gensler, this morning in a statement, Lisa, we allege that Sam Bankman-Fried built a house of cards on a foundation of deception while telling investors that it was one of the safest buildings in crypto.
Basically talking about risk controls that ended up being less than. There is also this hint, to Tom's point, about broader investigations, broader potential malfeasance within the crypto space. What I find interesting, Tom and John, is that if you look at Ethereum, if you look at Bitcoin, they're both up on the day. There is a question of why there hasn't been some sort of market-based wholesale skepticism as we watch potentially this as the first domino of potentially others.
Well, we're gonna have to see, and it's gonna unwind here as we go through the morning again. To be clear, I'm watching the Binance news yesterday off the Reuters article and comments this morning out in the zeitgeist, and some of it is pretty sketchy to be fair, and we'll just have to see how that unfolds. We're going to try to stay on the rails here of a report in almost 2 hours on inflation. It is the focus of everyone in economics, finance, investment. We speak with Bruce Kasman, chief economist at JP Morgan. Bruce, I don't want you to play equity strategist, but your shop made a splash overnight with a 10% lift in equities if we get under a 7% inflation, 6.9%. Translate that for your strategists and our audiences this morning. How do we get to 6.9%? What kind of inflation is that?
Well, it's hard for me to see that. We're looking for a number that prints 7.3, so I think you'd have to get that with a pretty big surprise to the downside on energy prices, and then, of course, have the core number surprise. I think from the point of view of the Fed and from the point of view of the market going forward, what really matters is the Fed's reaction and how it looks at the core. I think what we're seeing and what we believe we're seeing is a fairly sharp slide in inflation, but one that's incomplete, one that's getting us into the 3 to 4% range on core inflation here. That's very good news in terms of where we've come from, but it's not enough to stop the Fed, and it does hold the risk that we get stuck here as we go through 23, and that requires more action than the market is currently expecting.
Your Friday Weekly Prospects is world-class in analysis of housing, not only individual homes, rentals and that, but also multifamily properties as well. What is the housing dynamic that we should look for in these inflation reports in 2 hours?
Well, I think what you're seeing in the housing market is that the rental prices on the margin are coming off, but I think when you look at what's actually measured, which is the average price for the economy as a whole, it's going to continue to be up. We're looking for a 7/10 rise in shelter costs. I think the dynamic in the core, if we leave aside energy for a moment, is really that goods prices are being pushed down by fading supply chains, rising dollar, weakness in goods demand we've had globally with particular weakness in China, and the continued stickiness in service prices. Shelter's the big part of it in the CPI, but the broader story actually is services outside of shelter have not actually showed any signs of moderating. And I think, as Chair Powell has made this point, it's more closely tied to what's happening in labor markets.
And this is why people are also looking at that pool of savings that people have that JP Morgan's Jamie Dimon came out and said could be eaten up by the mid-year of next year. How do you sort of look at that dynamic, at the ability of the consumer to borrow, keep spending, and that services side inflation that has proven to be sticky?
Well, I think we have a multiple of forces working on the consumer right now. One, as you're saying, is we've used up a lot of that cushion and probably will use it up entirely over the course of the next year and a half. That, though, is not a deficit. It just means you have less of a cushion. On the other hand, the fall in inflation is a rise in purchasing power. The dynamic of government policy has been taking away transfer payments through the first part of 22. And as we turn to 23, we're going to get big COLA adjustments. So I think the key here is where labor markets are. Right now, labor income is still growing at a pretty rapid pace. If you don't hit that pretty hard, if you don't hit business spending, business hiring, the consumer is going to be fine. It's got lower inflation, strong labor income, and rising transfer payments.
I've also been looking at China's reopening and trying to gauge out how this is going to affect inflation next year. Even if services inflation comes under control, how much could a reopening that's happening a lot sooner than people expected spur inflation back in the commodity sector that has seen disinflation recently and cause another bout later on next year?
I think there's two issues. First of all, when China reopens, it's not quite ready to reopen in terms of its healthcare system, its immunization position. So there's a lot of uncertainty about how much lift you're going to get in the immediate sense. And I think one of the things we're going to see this week is the November data in China. It's going to be pretty ugly. The economy is looking quite weak as it ends the year. So I want to make the point that I think there's a big reopening to come in China. I don't think it's happening now, and I don't think we're going to have it hit markets in the next 2 or 3 months. Having said that, when it does happen, I think you are going to see a very strong lift in growth. China has been seriously depressed by the COVID problems, and it's going to continue to be so for a little while. And I think it will boost commodity prices. But inflation in the U.S. is not going to be driven primarily by commodity prices. It's going to be driven by the combination of tight labor markets, inflation psychology, and what the Fed is doing to demand.
Dr. Kasman, Dominic Kostom over at Mizuho, you and I have studied him for years, really talks about the shift here from a supply side analysis to a demand side analysis. In that, service sector inflation will be more persistent. We'll have an inertial force and we'll have trouble coming down. Do we risk, as he talks about, as Dr. Kostom talks about, do we risk the Fed, quote unquote, fixing service inflation and getting itself into trouble?
Well, the Fed's got a difficult job here. Let's make that clear. What we're seeing right now is the supply chain problems, the commodity price pressures come off. Those forces, they come off, is giving us a relatively sharp drop in inflation. We've got up to about 9%. We're going to get down, if we're right, below 4%, largely on that alone. However, as that stuff is coming off, the tightness in labor markets, the pressures there, the underlying continued support for demand in the service sector, and I think psychology are all factors. You can call that demand, but I think it is a mix of things that we want to understand is driving it. It's moving in a way that's limiting and probably not going to allow inflation to get all the way back down to the level that the Fed is going to be comfortable with. And the Fed has to deal with that. Even if the source of those was a supply-driven pandemic dynamic and the Russian invasion, the Fed still has to deal with the consequences of that. And the way they deal with it is to weigh on demand and unfortunately hit labor markets.
Hey, Bruce, wonderful to get your thoughts, as always, ahead of CPI and the Fed. Bruce Kasman there of JP Morgan. Lisa, you mentioned the reopening in China. COVID's ripping through that country right now. We put a story out this morning. The currency volumes have been falling in China Brammer was traders calling sick.
Yeah, well, this is exactly what Bruce is talking about. They might try to reopen, but can't. They don't have the infrastructure. They don't have the jabs and the arms, and that's what we're seeing with the numbers climbing, even as they move away pretty dramatically. I mean, it's shocking how quickly they have wholesale dropped a lot of the requirements that people had gotten used to for a while.
I know you saw the fund manager survey from BFA. Just expectations around global growth, just improving just a little bit off the back of this China story.
Except you're not seeing it in the commodity trading. We've been talking about that. So how much is Bruce Kasman's view really what's driving the action? People saying you could try to be open, but you just don't have the infrastructure in place just yet. Maybe, though, it is a story for 2023.
Dollar CNY right now about 6.98. We'll pick up on that story a little bit later. If you're just tuning in on Bloomberg TV and on Bloomberg Radio, the headline crossed the Bloomberg terminal about 20 minutes ago, 30 minutes ago, from the SEC charging Samuel Bankman-Fried with defrauding investors. And Tom, some pretty bruising quotes in this statement. FTX operated behind a veneer of legitimacy. Mr. Bankman-Fried created by, among other things, touting its best-in-class controls, including a proprietary risk engine and FTX's adherence to specific investor protection principles and detailed terms of services. But as we allege in our complaint, that veneer wasn't just thin, it was fraudulent.
There's a history here, and they do cite 33, sort of the advent of the Securities Exchange Commission out of the first debacle of the Depression. And this goes to what we've seen from, say, Harvey Pitt or Arthur Levitt, a Bloomberg LP board member for the years. When the SEC speaks, there's a certain tone different than courts, different than prosecutors. It's very line by line, and this press release has that line by line feel to it.
Elisa picking up on that tone this morning, that's for sure.
Yeah, and trying to send a message, that's very clear, to a broader industry that potentially there are other risks. FTX's collapse highlights the very real risks that unregistered crypto asset trading platforms can pose for investors and customers alike. How broad is this? How many individuals? What type?
Bitcoin, flat. 17,400 off this news. I'll be honest, I would not have expected that.
Lisa mentioned the same thing a little bit earlier this morning. But there is a distinction to be made here, right? Is there not? That this is a failed platform versus something else that, Lisa, a lot of people still have a ton of faith in.
That's the question, though, right? Because if people start withdrawing their money, how much is this people just hiding out in the best case scenario? But how much does this broadly diminish the investor interest in the crypto space?
You got three groups. Nora Rubini sitting here. It's not accurate. You got another group that's taking the Kool-Aid. And John, you mentioned the group in the middle looking at troubled platforms, but a legitimate coin or token. It's a currency key on the Bloomberg. What's that about?
That's the conversation we're going to have for a long, long time, I suspect. Equity futures right now positive by 0.5% on the S&P 500. It is CPI Tuesday, your data, 8:30 Eastern Time.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The disgraced co-founder of crypto exchange FTX, now in custody in the Bahamas. Sam Bankman-Fried was arrested after the U.S. government filed criminal charges. He'll now await extradition. FTX declared bankruptcy last month after it ran out of cash. There's speculation that client funds were misused before the firm's collapse. The Securities and Exchange Commission filed separate charges against Bankman-Fried, saying that he defrauded investors of $1.8 billion. In Ukraine, President Volodymyr Zelensky warns that a lull in Russian attacks won't last. He says the break in aerial strikes is a likely a sign that Moscow is preparing another wave of attacks. Zelensky also suggested Russia start withdrawing troops from Ukraine around Christmas as a good faith gesture. Hong Kong is scrapping some of its last remaining COVID restrictions. That follows China's rapid shift away from its zero-tolerance approach. The government will lift a ban on international arrivals going to bars or restaurants. It will also stop requiring people to scan a QR code on their phones to enter venues. COVID curbs have hobbled Hong Kong's economy. The White House calls attacks by Twitter owner Elon Musk on top medical advisor Anthony Fauci disgusting. A White House spokeswoman also said Musk's tweets are dangerous. Over the weekend, Musk mocked the use of gender pronouns and called for legal action against Fauci, tweeting, "My pronouns are prosecute Fauci." Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.